Welcome to the Crypto Kingdom. Welcome to the Crypto Kingdom, guys. This is London. We want to reach back out to you. We're coming in and we're going to be speaking about Dogecoin this evening. We had a great stream earlier today. We talked about how the price targets that we had laid out for Dogecoin had gotten met exactly, guys. You picked up on these price targets. Let me move this out of the way. What we do here at the channel is the Crypto Kingdom. We give you pricing targets, okay, based upon very well drawn technicals. We get into delivering those to you, and the purpose is so that if you would like to make a trade, you can educate yourself, you can enter into the pricing target, and you can capitalize on that move, on that trading move. The most recent pricing target we were able to deliver was precise. I mean, the market maker came down and exactly met you at that pricing target. We delivered it to you around, I want to say, what was that, April 16th, okay? You got picked up on the 17th, also got picked up on the 18th after you watched the other video. The original video, then I think there was another video, that included it again. And as we discussed this morning, we had a live stream this morning. The purpose was to kind of inform people that it had gone very well thus far. Now, since that time, it's been relatively flat, but you were up about 70%, okay? If you had followed the pricing target that we delivered, you were up 70% as of this morning. Now, Dogecoin has been doing well. It doesn't need any help. The key was we brought you the pricing target while, okay? We brought you the pricing target while it was in a retracement period. So it was a difficult kind of, let's say, a difficult, I guess, call to make. Not everyone was going to make that type of a prediction, okay? Going to do that type of calculative work and bring you this exact level to say, yes, right here, exactly right there, and exactly right there, that's where you can get in. And that was the difficulty that we saw within this area in and around here. Things were correcting. You lost, I think, a total of about up to 50% of the actual value of your holdings. It was close in between the 45 that you reached and about the 24 that you went down to, or 23 I think that you reached, or almost 22 with the candles, as I recall this exact specific chart. So about a 50%, if you got in at the very top, 50% was the retracement level. That's what we deal with here. We focus on retracements, and we do look at Fibonacci's, okay? We've been having a lot of success, as you can see, with these specific pricing targets. And guys, that's what we do every day here. Literally, that's what we do, is prepare people to enter and to get a good value in price. When you decide that you want to invest in something, you guys all know, the point is, yes, you'd like to invest into something wonderful. That's great. You've made a great decision in your life. The point is not just what would you like to invest in, it's at what price, okay? As you see the green ticker here, okay, on the bottom, the green and red was flashing green and red. That's the price. Everything in a market revolves around the price, all right? So we prepare you, we deliver the crucial information in terms of where is the proper price, at what point is the proper price to enter into. And guys, the actual entry points were phenomenal. Just to update you, literally right on the key here, in and around the 23 cents exactly. The market maker came down. Now that's the exchange, okay? That's the guy who's handling the purchase and the sale orders. He decides, okay, these guys have orders down here. We're going to pick them up, okay? And these are literally just predefined ratio, essentially ratio targets that we get into, and those ratio targets are, very predictable, okay? Extremely predictable. So we have had a good result in and around the work that we've done in and around Harmony One. That was a 20 times your investment. I know that Harmony One is doing very well now, okay? It's doing very well, and Dogecoin, it's kind of like the moon is literally the limit now. So we're looking forward to that being, just kind of more of the case. Now, what we wanted to talk about today, because we deliver these pricing targets on the downside, okay, at least on the retracement. Now, it's a normal thing that a pricing action will go through a retracement. You're probably wondering, what are all these yellow lines everywhere, okay? The yellow lines, I have drawn these for a reason, okay? I've done a few different things, and I want you guys to consider exactly kind of what's going on with these yellow lines. They are set up, and I will take them off now, okay? But they are set up with the purpose in mind of giving you an idea as to timing, okay? And the timing is something that's been kind of adjusted in the sequence of what you're looking at. The blue lines now represent where those yellow lines were if we were to put those back up, okay? If we were to put those back up, I can just tell you, this is a Fibonacci timing interval sequence. Okay, we've drawn out the Fibonacci's. Now that's just an ordered set of calculatives that program and figure into the pricing action. So as you look at Dogecoin, we look at any chart, it's going to figure in, those calculations are going to figure into the calculations in terms of the price. Now it's also something that you can look at and you can figure into the timing, okay? The timing, these duration intervals that we're looking at, these yellow bars, and I've highlighted them because the blue, the natural blue part of the program, this is just, I'm looking at TradingView, okay? TradingView, this is the Pro Edition. My background, I'm a former financial analyst, okay? Lead financial analyst over $1 billion equity fund. We worked right up against and across the table with Harvard and Harvard Endowment. Had a great successful time with them. I was a lead analyst on that situation right out of college. So, my numbers were good for them. I enjoy doing charts. I enjoy financials, and I'm happy to be able to bring this information to the Dogecoin community, also to the Harmony One community. We're huge Harmony One fans. We love Harmony One. We love the community. You guys, we love the fact that you're here tonight, and we can teach you a little bit about, I'm going to teach you about, let's go through the timing, of course, okay, and that's what those yellow, big kind of, yellow, and I want to make it really bold for you to understand. We're going to speak about timing. We drew this out this morning after the stream, and I want to talk about the timing because what's going on, we're kind of in an extended, as you look at this, we have intervals here which represent, and if I leave these, if I put these back up, you'll see the interval basis here. It's like we're moving well. We have this kind of first rung in the ladder, this first step, the first step in the staircase, in and around, let's say the 13th of March up through the 14th. Positive price action and some sort of stability or consolidation, we could say, a consolidation phase. Next rung up in the ladder, a little bit of retracement consolidation, another rung up in the ladder, and then we reach a point of kind of, kind of a heavier degree of volatility, probably would be the best way to say this, with more of a predictable kind of overall aggregate retracement, whereas these individual price actions were retracing just a touch. Okay, and this is all very relevant to your price right now, where you're going, okay, what the high will be. All right, we're going to get into some extensions in just a little bit. We're going to start talking about the extensions and exactly what that's going to be. We have a hey, Tom and Jerry, how are you? That is brilliant. I appreciate you coming in on a super chat. Very nice to see you there. And you guys, we do have, I think, super chats enabled, so I'll be able to plug in if you guys have specific questions tonight. We went ahead and enabled that so you guys can ask questions, because I know this is hot on the ticket. We also have some hot ticket items on Harmony One. Guys, realize that's a 20x. You guys are you're up 400% in Dogecoin, but you've done phenomenally well this year. Both Harmony One and Dogecoin have been stopped by the exchanges. Dogecoin was stopped by Robinhood, and Harmony One was stopped by Binance. So you guys are very much the same crew. We love both of you. We're going to struggle through all this and make sure that we can do all the work possible. We were up at about 3 a.m. this morning, and the Harmony One crew knows, yeah, that's London. That's me, okay? I'm London with the Crypto Kingdom. Crypto with a K, okay? Crypto Kingdom. And while I'm at that, why don't you guys make sure and go to Twitter, okay? Make sure you go to Twitter, and I'm worried. It's up or no? Please tell me it's up. Okay, it is up. Good. I'm like, I hope I didn't log out of Twitter while I bring this up. It would just be a mess. So yes, it is up. That's good news. If you guys can look at Twitter, I want to just bring up our profile, okay? If you search in the search box, if you type in The Kingdom, okay, TheKingdom, very generic. We're very happy, and shout out and thank you to Jack and Twitter and all those guys. The Kingdom. You'll have to scroll to the bottom of that search box. It'll say Go to the Kingdom. It won't be one of the names featured. It'll just be text. It'll say Go to the Kingdom, at the Kingdom. Then click on, go ahead and click on follow. And we will plug you into our pricing targets. We will plug you in to everything good and make sure you guys are fully aware. Turn on your notifications, all that good stuff. Guys, this is the most accurate channel that you're going to find. We do have the Discord link right here. If you guys want to chat with us or ask me questions, you can pull into that section. And yeah, let's just get back into the charts right now. I wanted to show you that Twitter. Make sure you subscribe. Guys, we're trying to be the most accurate channel. And I will just tell you, on Dogecoin, There wasn't another channel. There was not one single other channel or individual that was on any kind of a space that was talking about the exact pricing targets, okay? These exact pricing targets in and around this retracement, which people were able to trade and made. And I got up early to make sure you guys knew your pricing targets hit. And we talked about those targets in and around this area, okay? When it was completely unknown, okay? It was not known by anyone which pricing targets were going to be met. Now, what's the value of that? Well, I'm giving you this pricing target. Bam, okay? So I'm giving you that exact pricing target saying, yes, the program is showing us, it's demonstrating that's going to be a pricing level that we want to take advantage of, okay? So when the order is accepted, okay, and you're able to put that order in and you experience this positive price action, you are achieving, what was it, a 70%? We woke up this morning and we were experiencing some you know, what I would say a positive price movement, some action to the upside. And in line with this, it was a beautiful price movement. We just went ahead and got on the air because I knew I'd given you the price target, okay? And that's the crucial information you need. Anyone can throw a dart at a dartboard and not know exactly what they're doing. Sometimes you'll get in too high, sometimes too low. With the strategy that we provide, guys, with the strategy, it's very difficult to not make money. You just need to make sure the one qualifier is that you don't overexpose yourself at high levels. You do not over leverage yourself at any high price action. And I'll go through how we accomplish that, okay? A lot of you may be holders. You've been holding for a long time in Dogecoin or Harmony One or whatever coin you've got. That's beautiful. I hope you guys appreciate the fact. And what I always like to tell people, you have chosen a phenomenal coin. It has appreciated in value tremendously. That means you may have a knack at this, okay? You may have some inherent skill in this entirety, in this whole space of crypto. I encourage you to develop every aspect of who you are and to get to know the members of your community so that you can thrive as an entire community. And, you know, just so you can be kind of, you know, more robust in your own understanding, because you definitely have a knack. If you got in at 0.0001, we need to get to know you, and I would hope that you would say, well, these guys seem to be good at trading. I would hope that you would think, well, maybe you need to get to know us as well. So that is exciting, and we hope that that is carried through in a positive fashion, and that everyone can understand everyone's place in terms of the holders, in terms of the traders, in terms of the market makers and the exchanges. And I have some good commentary on that so that everyone can understand what's the purpose, for instance, of a price target. What are we serving? What role are we serving the overall community if I'm saying, well, this is our price target right in here. This level of the 23.3, okay, which we discussed before it surfaced. You guys can review the initial videos on that if you'd like to. It's beyond dispute, okay? We gave you the pricing target. What role does that serve people who got in at a lower price? What good does that do? What we're doing is we are enabling and we're further facilitating people coming in at this price and showing a buyer interest, so that when your price for whatever reason is decomposing, or when it is retracing, I'll just say retracing, okay? And that's the natural ordered event from a positive price action to a drop in the price, or a retracement is the definition there. Just a drop in the price, very simple, okay? When that occurs, we are part of that effort to bring in the buyers, okay? Based upon the technology, based upon the actual essentially the program, okay? We're allowing this program to function, and we're going to get a read on this program. I'm going to interpret that and deliver you the information, because I'm a very technical guy, okay? I have a finance background. I used to own a private hedge fund. This is what I do. This is what I enjoy doing. It's not financial advice. Go sign up with a broker and sign all the waivers if you want to do that. I'm working a program. I want to make sure that people understand this program in context of an overall market theory, in the context of an overall market theory and strategy, where you understand that you're never to be over leveraged on the top side, okay? Nothing at any point in time should incline you to become over leveraged. The worst thing we ever hear is such and such got in at such and such price. And I'll tell you guys, this is dangerous on this specific, it's dangerous on any stock that's doing well, or any price action that's appreciating phenomenally. Why? Because it becomes very attractive that the price has gone up, say 400%, and it continues to go up. and it creates kind of a hysteria or mania. It's not a good solid place to make a good decision, I'll tell you that. And the market makers know that, the exchanges know that. That's why they send out the alerts. They send out those alerts out to everyone. Well, yeah, everyone gets those alerts. That's the next hot thing. Everyone wants to click and go ahead and buy, right? Well, we know that that's the time to wait, okay? That's the market maker fulfilling his function, okay? And for instance, on that one, when he was up and around this area, around the 45 cents. Now, I have heard in other videos today that Dogecoin set a new all-time high. Okay, Dogecoin today did not set a new all-time high. That was from one of your major stations, and I'm not harping on anybody in terms of any grilling any other station, but I want you guys to have accurate information. This is your financial holdings, okay? You guys need to have accurate information, and it was one of your major stations stating that you have hit a new all-time high today. That's not true, okay? You previously hit, okay, about, what is it, 40, almost 45, right? Right at 45, okay? And around March 16th, 8:30 a.m., okay? You met that price target at that point in time. Now, here today, you did not exceed about 40, is it about 41, 43? Let's say 43. Now that's important, guys. You need to know that you're getting accurate information, okay? Now the confusion came in, and you always need to know this as you're working this is the same software that's delivered by Binance, the largest station, or the largest exchange station in, they call it like a trading station, but the largest exchange program that is in existence, right? They're number one in terms of the crypto exchanges in the world. They're number one. What I will say is, as I move these are just line indicators. These are just timing intervals, okay? And they're very loud, okay? I have them being loud for a reason, and I'm gonna go over that in just a second. I think it's very relevant to where you're about to go in terms of pricing, okay? It's very relevant in terms of where this is about to go. Now, you have been in this upward kind of channeled pattern that's been doing well. And again, we streamed this morning, and it started about 3 or 4 in the morning, right when he started getting positive price action, because we had given the price target of entry in and around this area of 23. People picked up, the market maker literally jumped out of his way to pick those prices up. We showed a buyer interest, the strategists did, let's say that, and they were picked up by the market maker and up about 70%. I said, the coach has kind of blown the whistle, okay, at the 70%. Because I looked at kind of a derivative analysis, or kind of if I could fold over a previous gain into this current price action, it seemed like there was kind of a max out at that level. Sure enough, thereafter it had dipped down, and I'd say after we did the stream, just so we know, for a period of time of about, what was it, about 12 hours, about 13 hours. Sure enough, you were just sideways in a pricing channel. So I think we made definitely the right call this morning in terms of what the projected price was going to be. Straight line across, just straight line across consolidation. I don't think you risked anything by capitalizing on that 70% that you made today. Okay, so that's phenomenal. Now, not everyone made the 70%. That's why this is a good channel to listen to. Not everyone made that 70%. In fact, the ones who picked up here at our pricing targets, they were the ones who made 70%. And I just want you guys to focus on that. They are the ones who made the 70%. The ones who may have been involved up and around this area at the higher prices, they did not make the 70%. They have been fighting and potentially losing up to, seeing the value of their account go down potentially about 50%. Rough. It's tough, guys. Reach out and support your community. Some of these people are new to the space. They need your support. That's what these communities are all about. We do that with Harmony One. We're going through a lot of retracements right now. We're reaching out to them. We support them very much so, and we've given them a great strategy to be able to cope with any drop in values. So that's just how we operate. It's how I operate. I've been around a lot of people who have suffered losses, and a lot of people who have had tremendous gains. So there's a way to reach out in a kind of a respectable way to operate around both of those conditions. So that's kind of how we're geared. Now, as we look at the kind of the price action here, we're going to go through a few different things. We went over this morning a little bit of a cross indication. There's a lot on this chart right now, which we will clean up to identify. These are extensions. This is going to tell us in a bit on the right-hand side. That's going to tell us where are we headed if we're going to the upside. Okay, these are the calculations in terms of exactly where you're going to be heading on the upside. All right, so I'm going to calculate. I'm going to bring up those calculations and give you guys some reference markers there that you can look at, just like I gave you pricing targets here on the downside that you were able to turn into already a 70% gain. And that's just what we do, guys. While this was going on, we were discussing for Harmony One. We love the management team. Like we love Elon Musk, we love Dogecoin, we love the Harmony One management team. So big shout out to you guys, big shout out to Elon Musk and company, and all the SpaceX gurus and all that good stuff. All you trading warriors out there, and day traders and holders and everything. People staking and wanting to use currencies for the world. Just enjoy it, guys. This is exciting crypto. These are two kind of our specialties here with the Harmony and Dogecoin. And it's just historical with Dogecoin. We're going to focus on it. It has been more resilient, and you guys need to know this. Dogecoin has been more resilient possibly than any other coin right now, than any other investment instrument in the crypto space. Okay? So I had some early exposure to Dogecoin. That's all I'll say. I had some early exposure to it in terms of ownership. I am familiar with the story. I love the story. I love the Elon crew. It's a phenomenal crew. My goal is, because I've worked on some heavy, large institutional kind of level and personal level investments in the past. Started as a lead financial analyst out at Duke University, and working across the table with a Harvard Foundation. What was it? $1 billion deal. In doing that, I gained a lot of experience, and I can kind of translate a lot of this information to you guys, hopefully in a clear and concise fashion, exactly like I gave you the pricing targets. And I can't say pricing targets enough. We'll deal with the extensions. That's on the right-hand side. Okay, that's the right-hand side. But as you look at this, that's really what matters, is this pricing target. Okay, this price action. That's your ultimate concern with Dogecoin. That's your ultimate concern with Harmony One. With whatever you're looking at, we're worried about that price. That's what we constantly watch. That's what we're trying to predict. So it's not just what you want to invest in. Well, everyone loves and wants to invest in such and such. Well, that's fine if we want to invest in Dogecoin right now. The real question is, okay, great, you made that decision. Now, at what price? Then you're prepared. Then you're prepared to have a real discussion. Until you get to that point, you're just, you still don't even know if you have a chance of making any money. If it's even, is it really an investment? At that point, I would just say, and I won't qualify things in terms of whether it is or whether it isn't. We won't go through that kind of talk right now. But you understand, it has to be at the right price. So when we speak about a retracement, we speak about a price action. I'm delivering those based upon the software. Again, this is just the exchange software. You can get the Pro Edition yourself if you'd like to, or the Premium Edition, whatever you'd like to get. Just make sure you master it. Make sure you can functionally work it. Because as we talked about, on the line chart here, certainly we achieved a new high, right? Yeah, it looks like we did. On the line chart, we achieved a new high. I've drawn this line here, and I'll remove these in a second, okay? These kind of crisscross situations on top. This ascending line where we reached a higher high. Sure, on the line chart, that's beautiful. Very nice. Very nice. We achieved that. An upward, a new higher high. Wonderful. What's the problem with that? Well, there's this B line here, kind of a cross indication that we're currently working with. So there's a lot on this map, a lot technically, but I want you guys to understand a little bit of the jargon, and then I'll back off, we'll zoom out, and we'll make kind of sense of everything. When we wrap everything up together, you guys will be glad we went through all these nuances. Now on the B, if we look at the B here, this B line, the B line, you remember the A one was on the line chart. It showed a stop here, then it showed a stop here. We showed a higher high today. Now on the B line, you'll have to look at this and you'll see, if you can look closely, well, if you look back to that price action in around 45 cents, okay, from the 16th of April, if you look at that and you look at the highest candlestick here, the highest wick here, we're actually going down if you're going wick to wick. Okay, so that's a cross indication, okay, and that is something which is a little bit confusing as we're trying to predict exactly where Dogecoin's going to go. And anyone that's not representing that information to you, I would at least like you to understand that is going on right now. And in terms of the thoroughness that I want to present to you and the specificity, for instance, with which I would present you with a pricing target, okay, at a specific calculated level. Okay, and these are the calculations of the exchange program. That's what we're using. Trading Views delivered with Binance. Everyone uses it. Not everyone gets the premium edition, but you can. If you learn how to work it, you will come up with pricing targets. You'll come up with the correct entry spots. A lot of people are interested now. They're asking me, should I just get in at any level? What should I do? Just work your Fibonacci's, work your retracement tools, come up with a strategy. You always want to try and accumulate more at a lower price. Guys, there's a lot of people who've been in Dogecoin for a long time. They've decided to sell out along the way. They're looking at even. They're making the decision it's going to continue to go up. They want to get back in at a good price. Some of them would like to get out at an area like this and like to accumulate. Can you believe it or not that they would like to reaccumulate at a 50% discount? Now, essentially, that's exactly what we're talking about. It went from 45, do the math real quickly, from 45, okay, on the 16th of April, it went from 45 down to what? It went down to 23. From 45 to 23. Almost, okay? Almost a 50% retracement. Okay, if you could have sold at 45, however much you had, if you could have sold that and you could have bought back almost twice the amount, you see what I'm saying? If you could have doubled your position within a day, there's probably very few people that are really long on Dogecoin that wouldn't have said, well, sure, I'd like twice the number of coin. Sure, absolutely, at the same price, yeah, I'd love to double my investment. Absolutely. So, and remember, this was during the time period, and you just pay attention, guys. This was during the time period when you guys were watching your phone, and this thing was just peeling to the upside. You remember that? There was just no stop to it. Literally, the thing, it was phenomenal price action, right? Literally, just peeling off to the upside. It just was not stopping. You guys, if you were watching your phones, watching your screens, it just wasn't quitting. It just wouldn't quit. It just wouldn't quit. It was phenomenal price action. We'd love to see it. It was beautiful, right? But what happened? Well, at some point you decide, you know what, I think I'd like to maybe accumulate twice as many as I have right now. And it's not easy to pull that trigger. We buy low, we sell high. That's not to say that, that we have quote unquote paper hands. Who's going to judge you for having paper hands if you got out and got back in and the opportunity presented itself? I don't know who got in exactly on this level, okay? But the opportunity presented itself to get back in at half price. That's a phenomenal, phenomenal difference. If you had gone up to $1, guys, and prepare for the volatility, if you had gone up to $1, okay, $1, and you dropped back to 50 cents within a day, would you say that you have paper hands because you sold at $1 and you bought back twice as much? Listen to this, you bought back twice as much at 50 cents, and then with that amount of money and those coins, you decided the next 2 days to make 70% on your money? No. That is exceptional trading, guys. That's the type of information that if we can harness that and bring it together, that you would want to capitalize on. That's the kind of logic in a market that you really want to apply. So that's the type of information we want to bring you. Okay. Now this trade, we entered into this trade. Okay. We experienced this trade. This was exactly predictable, the 70%, okay? It just was exactly predictable. Why? Well, it was just the function of the previous price action. Like exactly. The limit here was exactly. This was a carbon copy, picture perfect bull pennant. We weren't going to pass it up. Bam, to the upside. So you're getting a 50%. Just imagine it goes to the dollar and you get to pick it back up at 50 cents. Do you want to do that or not? If anyone asks you that question, the answer is going to be yes. I'm not promoting that everyone do that. I'm just saying if that dynamic presents itself to you, otherwise I have to state this. The purpose of Dogecoin, and listen to this with a good open heart, the purpose of Dogecoin is to be spent, right? Absolutely. You want to have some sort of an idea that it's going to be free flowing in and out of your possession, I would imagine. Or is that only going to start at some point at $1? Or is it just going to, you're going to capitalize out and sell? I don't know what that is, but for people who don't want to let loose of anything, it's kind of a contraindication to me. And I may be incorrect on that. You guys may have a better idea of what you want to do with it particularly, but to not be able to let it go, I would say, well, you're going to be spending it everywhere, right? When it increases in value, you're willing to go spend it everywhere, but you're not willing to kind of, let it go for a second to where you have more of it to make some money. I don't know. It just seems kind of that interchangeability seems like a good function of it for me, that I can understand that, yeah, the people who are trading it may actually be the ones who are kind of pushing the whole thing. We traded enough. We'd like to go ahead and, trade it for, commerce, trade it in commerce, use it in circulation, have it actually be our currency. I'd be surprised if there was a big pushback from the community. I'd be surprised if people weren't willing to trade, if they didn't like to trade, if they weren't engaged kind of in the commerce or the overall price action, we'll say the market, the same way they'd want to be in commerce. Okay? So that's kind of an interesting thing for us to, dynamic for us to explore. Meanwhile, do understand on this B level, and I can take this away, it's a contraindication, it's messy. All right, it is just messy, but you see that target right here. Let's go ahead and clean this up a little bit. We'll talk about some different details. Okay, but this B line right here is on top. And as I move this A line up, you'll see B, the candlestick here, the top of the wick here, and the top of the wick here from today's price action. You did not technically make a new high today thus far. All right, and it gets a little messy. All right, and we'll move that A line back. That's just a contraindication. That's two things that are indicating two different things to us. Okay, because on this lower line we can get into the framework of how a line chart differs from a candlestick kind of chart. Let's see if I can get back in here. There we go. From the candlesticks, we can get into what this composes. The way I like to think of this so that you understand it is, okay, this is going to represent more, in terms of the line chart, it's going to represent more of what the average, or I say the entirety of the market's going to be able to experience. The price action that the entirety of the market's going to be able to experience. Okay, it's kind of the consolidated price action, I would say. That's not to say that the experiences, the other experiences need to be left out. Okay, if we look at the A and B line, okay, it's not that they need to be left out. And let's go ahead and get into kind of the projections. The whole purpose of this specific video is going to be projections. And we're going to deal with some projections here on Dogecoin. Then we're going to deal with some projections on Harmony One briefly for both of them, hopefully. And maybe we'll see some interesting things happen because it looks like you're trying to push up here. Again, I've had these lines drawn out since this morning after the feed. I went ahead and drew these. Now I had these big, robust, very loud. Okay, very loud. These are too loud, but I need to show you these because you've never seen timing intervals, I would imagine. Maybe you've played with them a bit, but you've never really seen Fibonacci timing intervals. All this is, it's a notion of timing. All right, it's the order with which things are expected to kind of be timed and grow. All right, it's built into the trading software. Okay, so when you see this is kind of like a 1 interval. Okay, this in here is a 1. This is kind of a 0. This is kind of a 1, a 2. This here is kind of a 3. All right, this is kind of a 5. If you don't get a reset, this is kind of a 5 out here on the right. Okay, so and those are your Fibonacci's. Okay, believe it or not, they're your Fibonacci numbers. It's just an ordered sequence. It's very integral to the function of the market. That's all we really need to know. Whatever all that means, it's just an ordered sequence. So we have a positive price action in the zero, kind of zero terminal. We go to the first terminal. We have a positive price action. Okay, what is this? The second terminal, frequency terminal, etc. We have a positive price action. Okay, almost a full retracement in this second terminal here. All right, in the third terminal, we have very consistent, very nicely put together. Okay, now it can defy this. This is the program. As I'm looking at those contraindications, all right, as I look at those contraindications that I just represented by the highs, and that kind of the factor there that they're both between the candlesticks and the line chart is telling us different things. I look at something like timing, at least to tell me when we should be able to go somewhere. let's look at this. I don't need this right here. We're going to look at the extensions real quickly, okay? And we'll get into, give me a few seconds, we'll get into exactly, if you guys need to know how to draw a Fibonacci, make sure you don't draw it on the candlesticks, okay? Or if you do, you know why you're doing that, okay? Before you haul off and do your own charts, and you're going to trust them with big money at different levels, okay? And we always recommend not a lot of money. I'm going to say your risk and market theory will kind of suggest that you not invest money at the top. It goes against, what does it go against? Supply and demand. Your demand curve. At high prices, you're not going to have any demand. But as the prices drop, you'll have more demand, right? And so we increase the amount of demand on kind of an example basis, and we say, well, yeah, at the next level, maybe like $100, you know, maybe that's 100,000 to you, or maybe 10,000, whatever that is. But whatever it is at the next level, yeah, it's probably twice that. So if it's 100, it's $200 or 200,000, etc. At the next level down, it would probably be about, you know, twice that full amount, maybe $600 or $600,000. And I do a double down or a triple down approach. It's kind of a heavyweight double down or triple down approach. It's used by the top investors on the planet, the top institutional investment firms like BlackRock, competition like $3 to $6 trillion in management that are involved in the crypto space specifically. They're ready to double down at lower levels. Now that works for our retracement because why? We're looking for a price target. If it were to go through this first level, well, we have more backed up right here at a heavier multiple level. Okay, the amount of cash available is multiplied here. Now, why do I bring up that example? It's not to give you advice and tell you go out and do this and that. I'm trying to frame your mind around the fact you need to have more cash underneath. And it's not, well, $100 here, 120 here, 140 here. No. You need to be heavier, weighted more heavily towards the areas and the zones that will give you a greater discount. Okay? And heavily enough, you need to be weighted so that when you do acquire at the lower level, your acquisition of that increased volume amount of coins at that lower cost basis or at that lower price, okay, is going to allow you to where with every single increase or appreciation in a unit, in the unit price, okay, every little small unit in price that this goes up, okay, every increment in price that it goes up, you'll have that much more volume, okay? So all of the previous investments are going to be essentially negligible on both the, I'm going to say on both the amount invested, first of all. They're going to just fly by the wayside, guys, because you're getting into, if this is 100, this is 200. Add those up, this becomes 600 when it's doubled. Add all of that up, that's 600, 7, 8, that's 900 total. Well, it's going to be 1,800 here. And then here it's going to be 5,400. Okay, well, it may be 5.4 million, you see. It may be 10,000 on top. On the bottom, maybe 5.4 million. Whatever your approach is and whatever your figures are, and I'm not mentioning big figures to run people away or anything like that, or make you think, well, this is just a whale game, or he's out of his, his sorts. We're not here for that. Just listen, whatever amount you're at, if you don't have anything to back it up at a multiple below, you risk turning into one of the people who is overexposed at a higher level. When that doesn't have to be the case. You can enter and make multiple entries. You can put a limit order in. And that's all you're saying there is, I'm going to limit the amount of money I'm going to spend per coin. That's it. Here's a limit order. That's the maximum I'm going to pay for this number of coins. That's it. You can enter those in and then around the, at the 29 if you wanted to during this time frame. Okay? You can enter in the next level. I'm going to pay this much for, say, another, whatever the price is. Okay, you're going to enter in your limit order. It's going to be a greater amount of price. If it's 100, I bring these up for examples. I want you to do your own calculations. It's not financial advice, and I don't want to get frustrated with it. But at the same time, I don't know. I think you guys understand the concept. But if it's frustrating to me because I'll get back all of these questions. And hey, Yoski, shout out to you. Thanks for the super chat. I appreciate that. Diamond hands. I appreciate that. Yoski knows. He's been following. He's seen our pricing targets. He does just a phenomenal job with everything. We love Yoski. He loves all you guys too. He works very hard for you guys. So shout out to Yoski and the Diamond in the chat room. Appreciate that. I do see that. If you guys have a question, I am able to see that. So that's phenomenal, Yoski. We appreciate that. Let's look at just kind of back at the charts in terms of getting, I guess, oh, that's loud. In terms of getting, I guess, completely involved, or completely, what do we want to say? Completely aware of everyone's activities. You need to be completely aware of your activities and whether or not you're complying with market theory and market strategy. Okay? You have to be able to say, yes, I am behaving as if I understand and I'm complying with market strategy and market, kind of ordinary market behavior. If you are not, if you are involved at higher levels and you say it's high, I don't care, I'm going to put all my money into it, or I'm going to put too much money into it, you're not operating by normal market behavior. Because at high levels, you guys learn in every business class you've ever been in, okay, or thought of going into, at any high level, you don't have any demand, okay, at an extreme price, at a high price. As the price drops, yes, you'll start to have some demand. Okay, and as it drops more, you will have more demand. Okay, and the way that you cover your risk on the upside, if any of these levels, you want to be, particularly with something like Dogecoin, it's very hot, you want to be involved if it were to take off on the upside quickly. Absolutely. So you do start to pepper in some money, and that's the way I look at it. In around this first zone, yeah, just pepper in some investments in around here. Pepper in a little bit of money. Put some limit orders in. All that does is that make sure that you're behaving like a normal market participant, okay? And I say that because you're following market logic, a demand curve at a expensive and extremely expensive. And guys, that's the only way to describe this. It has gone up in price tremendously. It's expensive. Okay, we know it's going to retrace. Now it's going to go higher. Yes. What is the nature of a price action? Well, it's going to go up. It's going to retrace. Every time, every single time. It's going to go up, it's going to retrace. It's going to go up, it's going to retrace. It's going to go up, it's going to retrace. It's going up amidst the time, it's also been retracing. At some point, if it decides to go much more up, it's going to retrace. If from here it's gone up enough, it's going to retrace. It's a necessary function of the positive price action, I'm going to say, the positive price movement, okay? As it goes up vertically to the upside, it's going to drop down and allow us to enter in. They wouldn't give us this software for us to focus on this if this weren't the case, guys. This is just standard Fibonacci. It sounds real fancy. It's not. These are just calculations. They're just calculations of percentages of the retracement from the origination of the trend, okay, to the maximum, back down to, you know, the exact level, the 23.6 or the 38.2 or the 50% retracement. That's all it is. It's really easy. It gives you a guidepost to say, yeah, at this level of retracement, I'm going to put in more money and I'm going to put it in right there. Okay? That's just the guidepost they give us. And that's what we give to you. It's just the guidepost and the framework. We're double and triple down as we get to every single level so that you understand that you're supposed to be operating. It's just a small lesson that we're all supposed to be operating. It's a good reminder for all of us because we get swept away in the market hype. Everyone does. We get email alerts, we get notifications, our phone starts to make noises, and we look down and something's up 40%. Everyone starts to talk about it. Everyone wants to be a part of it, right? Wow, it's up 60%. Whoa, everyone wants to be a part of it, right? Now, we want to get it when it's down. We need the better price. Now, how can I prove that? Well, I was a part of this, okay, when it was up and around the 45 cents, okay? I was a direct part of that. Period. That's on my deal. The best part was when it was down here. Unfortunately, I didn't want to see it go down, but that gave us our pricing target. They gave me a lower cost. They gave you a lower cost. All right? When it goes up that kind of a level, we can expect a retracement. It's a natural function of the market. When you get a price appreciation like that, you're going to receive, typically an opportunity to reacquire at a lower level. So that's what we want to gauge. Optimally, we're out of at 70%. Okay? Optimally, we're gone. That's it. We want to buy back half price. Can you guys imagine? And please follow this example. For those of you, there's 152 people in here, and shout out to all you. We love you guys. We really appreciate you, loyal subscribers. Thank you so much for listening. I know you guys are getting a lot out of this. But imagine, based upon this, and I'm not spreading any fear or anything, the price action within the last 4 days represents the possibility that this could hit $1 and could go down to 50 cents within a period of time of 2 or 3 days, guys. Now, that's a big deal, right? That's a big enough deal, I think, that we're going to go ahead and say that, yeah, we need to kind of pay attention, don't you think, to kind of what's going on. So let's look at, and I just say that, guys, because that's exactly what it just did. That's not any kind of well, London doesn't know what he's talking about. He's trying to scare people. No, I'm bringing up the truth, guys. I'm bringing up the truth. And you guys who trade, you know that. I don't have to repeat this. We've already been over it. Up to 45 cents. Up to 45 cents. Down to what? Down to our pricing target. When we were up in here, we got the pricing target just to the nature of the pricing action. Down to 23 cents was our pricing target. What's 23 cents times 2? What is it? 46? You see, that's almost double. Yeah. So literally, we're along the dynamic right in here that it could go up to $1 and crash back down to, or just retrace. This is just a retracement. Just retrace. It's a normal part of the pricing mechanism. A retracement of 50% would be back down to 50 cents. That's the pricing dynamic that has been built in. Now, for it to be a 50% retracement, it would have to shoot up to about a dollar, right? And then it would have to retrace within that paradigm. So it's not that, you know, you would build up along a staircase and then it would just drop down into 50 cents. That's a different pricing mechanism. And that's the caveat that I'll present to you. So there's a functional difference there in terms of what I'm presenting. But understand what you're dealing with as you have money involved in this, as you're looking at potentially capitalizing, okay, on your position. Something that's very exciting. It's holding up better than any other, okay? It's holding up better than any other, I'll say any other coin right now that I'm aware of. There are some other ones that are making gains, they're making money, they're doing what they need to do, but it's not doing very well. Not according to what I've seen, not what we've analyzed. It doesn't look good, okay? And I say we, the group, etc. We do in this Twitter. You guys make sure when you type in the kingdom here. Okay, I'm going to show you real quickly just to make sure you know we have an updated link to our Discord server. So let's go to the kingdom, click down here, go to the kingdom. You'll have to click on that in this search box. Scroll down. We're not one of the people kind of listed in here. We're not up front and center. The kingdom, you'll see that. Then bring us up here. It's the Crypto Kingdom with a K. Okay, I'm London if you guys have any questions. And go ahead and follow us. Our Discord link is right here. You'll see finance professional and former presidential advisor. Okay, so that is me, and yeah, we just did a giveaway. We had a good time with that. Back to kind of the charts here, but I appreciate you guys being involved. We have a great community. I know you guys are just kind of fervently involved in all things Dogecoin and Harmony One, and just having fun. I mean, we just have a lot of new followers, and a lot of people that are just kind of going crazy and having fun. So welcome to all you guys having fun and being a little crazy. We need that break. Because we are intense, huh? We have a level of intensity about us. And I think you guys know that. It's pricing action. It's what we love. It's just what we do. So let's look at that. From $1 down to 50 cents. Yeah, that's exactly up into 45 cents with a retracement down to 23 cents. That's not me talking. That in terms of something being difficult to understand, that's the exact pricing action. And you needing to be prepared that literally you could go to $1 and come down to 50 cents. That changes the nature, okay, I would hope your risk assessment. Okay, well, everything is risky. Well, who knows? It doesn't matter. We have diamond hands forever. I'll tell you guys, that's some phenomenal pricing action that I have not heard discussed anywhere else. Is that this represents the move kind of up here in the 45 cents to 23 cents. That represents, you know, a 50% retracement. If you were to go, you know, to $1 and you went back down to 50 cents, that may not feel so good. So, remain tight as a community, support one another. This is not the time in this volatile of it's kind of every man for himself. If you want to play that way, that's fine. If you want to be the tough stuff and that's what you want to do, that's fine. We have a good community. We like to assist each other. We kind of band together when we need to. We have people from all over the world that are involved in our very technical crowd. You may see our videos may have 5,000, 6,000, sometimes 8,000 views. That's a technical group, guys. A lot of professional people, a lot of degrees, a lot of education, a lot of skills to harness and bring together. So yeah, a lot of good ideas. You guys enjoy that Discord. Okay, a lot of good opinions going along, etc. there. So let's look at, let's bring this up. We went through already the cross differential on top. On the candles, you see things heading down, right? And on the, the line chart, you're gonna see, instead of down, what looks like we're slightly going up, right? So we have a few different contraindications. What we do have also, let's just look at this. Now we left off, I said the coach has blown the whistle. I just meant that because I asked you guys, we could continue and stay up. It was from this morning. This was the pricing target. We gave it to you, right? You guys know that. We gave you that pricing target. Boom. In and around this area, right? Absolutely perfect, beautiful. That's what we're known for. That's what we do. That's what I do here. You want a pricing target? You want to enter in? Yeah. And I don't feel bad about it at all. You were up at 45 cents. Yeah, you were at 45 cents. Yeah, so was I. What's my pricing target? Right here. Boom. 45 cents. What's my pricing target? Right here. Perfect. Why? Because you get in there and then what? You make another 70%. What'd you make from here to here? Up to the 45 cents. 70%. Right. So there's 170%. Then you're out, you're back in, boom. Pricing target here. Reestablish, you guys, you got the memo. There was an opportunity to make some money in the meantime here too, about 20% in the meantime. All right. I think you guys got that who watched the videos. So there's a 70%, there was about a 20% in here, and then was this pricing target was very, very in front of everybody's face, very clearly discussed in all of the videos. Bam, 70%. So phenomenally well done. We had the discussion in and around here. And for those of you who want to take advantage of pricing targets, things like that, and to be able to discuss them, if you're good enough to do it on yourself, that's great. I don't know if you guys are. Why aren't we hearing from you on like a channel or something? Because I'd like to have another channel like that. And some of the channels do a great job. I enjoy listening to some of the channels that are technical. Really, it expands my mind, and I know you guys enjoy those other channels too. It's nice to hear from professionals at all. So thank you guys who are doing the hard technical work. Thank you. Okay, I sincerely mean that. Thank you. And I hope you guys appreciate the work we're doing. What we're going to get into now is we have drawn out this Fibonacci. We drew this out. I'm going to go ahead and say we're going to draw that out to here right now. Okay? All right. The reason I feel comfortable drawing this out here is not only because we essentially have kind of a full line retracement at the top level, which kind of justifies moving it in and of itself. But we have just a nice solid, in addition to that, you understand that? The full line retracement to the 23.6, which is just the first default level of the Fibonacci. Okay, so that makes me comfortable bringing up from the original, and I say from the original, is from this price action here, the previous high, bringing it up to the new high, in spite of the fact that we're still on a lower basis of the candlesticks, of the wicks. I'm going to dispense with that. I feel comfortable doing this right now because technically, yes, it's a new high. We've also consolidated within this first range, this overall first 23.6 range. And since that time, I think it's a good time to start reevaluating because we have just consolidated within this channel. And the channel is clearly defined by this red zone here. Yeah. So I think that's okay. That's okay, and for a few different reasons. And we can come up with some more complicated reasons, but I think those are sufficient. Hopefully those are well stated enough. It's a little bit confusing still with the whole contraindication above. But essentially we have the full retracement of this channel. You see, and guys, this is just the default, okay? You do need to know which time frame you're on when you're making these, okay? Or else these may not line up for you as well. So look at that. From the previous, you see the previous high and around here again. It's just from the previous, from the start of the trend. And we're drawing that up to Bam, the new high. So we go ahead and give it the new high. I'm going to say the new high on the line chart. This is where, guys, this is where I get into this and whether or not we're going to draw it up to the candlesticks. I don't draw on candlesticks. So the new, I want to say the new relative high, the new interim high. Let's call it the new interim high for purposes of analysis, okay? So we have that, we have the consolidation in here, and we have the full retracement in along the top of the red zone here. That to me is positive that yes, we have established a new level. Okay, that's indicative of that. And that was about this morning when we had called off and said, well, the coach is on the field, and yeah, the coaches just called the whistle. It says, you guys, if you want to keep playing football, you can, you know. And what I did, I brought this over so you guys can see. I said it's kind of like a sticker. If I want to do a derivative analysis, that's a real fancy word. I'm saying I want to take the information away from this previous price action, and I want to apply it right in here. All right? I'm conservative when I'm doing that. If you have problems with the analysis, maybe I'm probably being conservative with what I'm doing. Okay? And that's okay. Just being conservative. There's nothing wrong with that. Okay? So being conservative and along here, etc. So and we can get through all that analysis. It's on the previous video. I don't think you need to go through all of that, but that's how we do a derivative, or what can we derive from this previous price action? How can we apply it to the current situation? When I say the coach is blowing the field, I'm just giving an analogy like, you know, we've been playing football, and I got on and I wanted to stream because I gave you guys the price targets. I know some of you picked it up at that price target, and I wanted to make sure you guys knew this is kind of within the realm of possibilities. You may have held on to a bit of it, right? Some people got back in at this level. And what is that? It's perfectly in line with our philosophy, with our strategy. It's within line of market principles. Okay, it's within line of market principles. Why? Well, because, you know, at a real expensive level, at the very top, we don't have much money. I'm not really willing to invest anything at that top level. Right? You know our strategy. That's exactly how it starts. Then what's the next part? Well, as you start to get into this level, I'll start to pepper in a little bit of money. That's fine. I'll start to create some orders in and around this level. You see that? A new high comes back down here, and yeah, that's fine. We're willing to put a little bit of money in this level. We like it. We've done due diligence. We like the fact Elon's involved, and we believe, you know, it's a long term. It's probably a good investment. It's probably going to do pretty well. Not a lot of money, maybe 100 in this level, right? Maybe that's 1,000, or maybe that's 100,000, or maybe that's in some cases it's going to be more than that. Okay, it's going to be $1 million. But if you have, say, 10,000 here, a high amount, you're willing to put 20,000 in here. If you have $1 million, it'd be $2 million here. 1,000 would be 2,000 here. And if you go on down here, you're going to triple down. You're going to double or triple down. And you have to be prepared to do that with the amount of your investment if you're going to do this, because you do want to catch this. And that's the trick. You do want to be able to catch this if and when it decides to go up, and it looks like it can. So the strategy is going to protect you on the upside. And guys, it's just the basic laws, the basic rules of market participation are going to protect you on the upside, believe it or not. Not on an extreme level. You never have to buy something extremely high that would contravene, that goes against market principles, that goes against an ordered market, your behavior in any kind of ordinary behavior in an ordered market. You're not forced to buy something at an extremely high level. It's high, it's the all-time high on the, I'll say the interim high, not including the wick, right? Not up to 45. Okay? Be careful who you're getting your information from. Be careful that it is accurate. Okay? So I'll discuss that new interim high. We know it went to 45 cents, right? Yeah, it's lost 50% of its value. 50% retracement. So now we're at this new interim high, and we've drawn this up, and yeah, our strategy is the same. You guys know it. And the ones who know the strategy, yeah, they're like, you know when this happened? Yeah, everyone's like, yeah, we know exactly when that happened. When did that happen? That happened exactly with BTC, didn't it? That's right. That happened exactly with BTC. Now we can bring up the candlesticks. When BTC fell off here, just understand with Bitcoin, we won't talk about it for a second, okay? When Bitcoin fell off, what did he do? Well, the market maker just went wham, he came down here and picked up some orders. Well, that's good. That's right in line with our strategy. And I'll keep saying this. You'll hear this over and over again. Even though this was a massive dump on down here, people are like, what is going on? Well, that's our strategy. We don't have anything to invest at this level. Right around here, yeah, we start to have some orders. And that was a massive, massive, shot down to pick up these orders for the market maker. It was nice he did that. It was an immediate 15%. Same story. That's a $1 trillion deal right there. $1 trillion deal. That's fine. Now, what's nice about this as we look at Dogecoin? Well, on Dogecoin, okay, we got the yellow back up there like that. On Dogecoin, we're essentially in the same exact boat. We saw the same exact pricing behavior. So that shows you the consistency of the strategy. It's no longer speculative in the nature that it's being repeated to a degree. If you did enter right here, and I always say, well, just pepper in a little bit of money up top. Maybe it's 100, maybe it's 1,000. Just pepper in a little bit of investments. Why? Because it's becoming less expensive. It's getting into a zone where we could reasonably want to participate at a light level. Just pepper in a little bit here. Set my limit order right in here, off the top here. The fibs get drawn like that, right? Yeah, the fibs get drawn like that. And limit orders get placed in, just a little bit of typing. And there we go. Just like that. All right? So then you're able to participate if it goes to the upside. But you're not so heavily involved. Okay? You're able to double and triple down as these go down heavily on the way down so that you're able to cover yourself with some insurance on the downside. Okay? Otherwise, you're going to get too leveraged out on the top. Okay? And they will wipe you out. The market maker will wipe you out because you're not participating. You're not behaving with ordinary market principles. Okay, ordinary market principles is extremely high price. You do not invest. You do not have anything. It's too expensive. You don't have demand. When it goes down, it becomes a little bit less expensive. Yeah, you start to participate just a little bit. That's the standard. That's the theory. That is the market theory, which has been taught for hundreds of years. Supply and demand. So if you contravene that, if you go against that, the market maker will wipe you out. All right, the market will wipe you out. We don't want people to get wiped out. We want you to understand basic principles, which you guys do. You're a very smart crew. You're very smart people. So, that's just what we want to encourage you guys to look at. It's a little bit advanced. It's not all intuitive. But as we look at this, the ones who are here, you're probably interested in not just that. You're like, okay, you understand. Where's the next pricing level? If you guys have questions, you can go to the Discord, etc. You can ask me questions there. You can pull up a chat here, etc. I think the super chat's enabled, so you guys, I'll be able to see it. Normally I just can't see it. I'm focusing at the technicals here. As we look at this, so where are we headed now? Okay, where are we headed now? Well, now we're going to need to get into something called a retracement. Okay, not a retracement. Yes, we'll look at the retracement side. We'll also look at the what? We'll also look at the extension side. That's what we want to look at. The extension. Pardon me. The extension is going to measure exactly, and we'll just get into this. I've laid this over, okay? And we'll get rid of this for a moment, okay? Just for a moment. We've had to kind of escalate the issue of the retracements, given the new high, okay? When we get into the details of that we just saw, given the new interim high, okay? That's crucial on that. Given the new interim high, we drew that specific level of a retracement. As we look at this, okay, this is what's called a Fibonacci extension. Okay, now what is a Fibonacci extension? Let me move these things. I'll just leave it. A Fibonacci extension is exactly, okay, it's a calculation. It's essentially the ratios of a percentage gain after a retracement, given an original price action to the upside. Okay, that's it. It's the ratios or the percentage gain on the upside after a run to the upside. So you've gone up, you're going to retrace, and there's a fancy kind of mechanism that's pulled in your trading view. It allows you to go ahead and kind of calculate where you might go up to. And we'll talk about the most likely zones. Okay, the most likely zones of where you guys might be headed if you're going to continue to go up. All right. So you've already gone up some. Excuse me. You've already gone up some, for sure, right? But you want to know, well, where does this train end? Where does it get off? Do we need to get off of it at any point in time? I'll tell you, as long as it's high, you know, the catchphrase here is, you know, we really don't have any money for it as long as it's really expensive. So we're always looking for a bargain opportunity. We're always looking for a good price. That's just us. Now this thing can decide to take off. We're going to get into the levels that it can take off. So I really would like to be able to. I think I can just do this. Let's get rid of these little stickers. All right, we've done the stickers. Let's see if they're just hard to grab. The stickers are hard to grab, aren't they? There we go. And let me do. Come here, sticker. There we go. There we go. Now, I did draw out those timing intervals. You guys know I drew out the timing intervals. Those are these blue lines. These are essentially Fibonacci timing intervals. You may not be familiar with them. They give us interval essentially 0, 1, 2, 3, and 4. Okay? Or you can do, let's say 1, 2, 3, 4. It's not even going to be that though. Understand Fibonacci's, it's going to be 0, 1, okay? 2, 3, and 5. Okay, so don't worry about that. Just understand that's what a Fibonacci is. Most of you will know what Fibonacci is. Okay, it's an ordered sequence that deals with growth. Okay, your next number is going to be the previous two numbers added up. That's why it's 1, 2, 3, 5. 5 is 3 plus 2. 3 is 2 plus 1. Okay, all it does, it deals with growth. Okay, so that's why it's applied to stocks. That's why it's included in the programs that we use. So as we look at this, let's look at Dogecoin. Let's look at what are the extensions going to tell us within these ordered intervals. And I bring that up because technically you should be at kind of a breaking point here soon, based upon the Fibonacci timing sequences, because this is taking a long time. The caveat you may not want to hear is if it really wants to breach through this and it doesn't want to behave, etc., it could kind of take a longer time, okay, in and on through this next level. Puppies. You guys must like dogs because you're into Dogecoin. So my pups, if they do bark out, I'm a dog lover. I think you guys are too. We're probably in good company for that. Sorry for the interruption. If your dogs are there with you and they're reacting to your noise, I apologize. Just a wild dog that loves to get up in the middle of the night and have fun. So anyway, probably like you guys, huh? Anyway, what we're into is the Fibonacci extensions, right? We want to know what the probable ratios are that are going to move to the upside. We want to know within what time frame as well. So I bring up the Fibonacci intervals, that timing. I bring those up, okay? Because they're not always, yeah, and you'll see this frustration on a lot of the price charts that you have. Well, we liked it in the very beginning. It was real consistent, aren't they? Real consistent, move to the upside. Real consistent, move to the upside. Real consistent, move to the upside. And you're like, should I still buy in? That's the question you always get to. Should I still buy in, right? Yeah. Well, you had a phenomenal break from 7 cents on up to 39 cents. It was at 45 cents, right? 7 times your money. Yeah, it was 6 times your money. Yeah, that's great. And look at the intervals. Yeah, it was just running through the roof. It was going so great. Well, it drops down from that. You guys will see the pattern behavior of the other pricing actions. And you're like, well, you're kind of hesitant to do it because you know that things kind of cool off for a while, right? Well, this is a real nice cool off here. After the retracement, now it was a drastic retracement, 50% from the 45 down to 23. So that hurt a lot of people. That probably caused a lot of people to go through some tough stuff. Welcoming people into the community when they may have been through that's difficult, okay? So as Dogecoin looks at going up in value, we would expect Doge to hit various levels if it's going to move to the upside. If it continues to crawl like it's crawling, you may be in for an extended kind of a lethargic price action, either to the upside or the downside, okay? And all I can say is that at this point, it's exhibiting consistent and ongoing, at least it's at least consolidating or in the achieving an overall what I would almost essentially start to call a trend. I'll just go ahead and say a positive pricing trend to at least establish a new interim high. I say interim on the line charts. We have to qualify that due to the cross indications, because the wick of the candle, the 45, was up here, right? We understand that. It reached up to 45. on the 16th of April. Okay, so on that level, it did not achieve a new high. So we're kind of giving it some credit towards this direction. It becomes interpretive, and I just want you guys to understand all the aspects so that you can go educate yourself on essentially the decisions you need to make. In terms of the extension levels on the way up, well, there's a few different ways that we can look at this, okay? We can either look at, well, this is the time frame within which something's supposed to happen. I just say it is already looking very lethargic. And typically things will get kind of lethargic. That's just kind of lazy. It's just looking lazy, right? And now it's not lazy to the tune of you guys got in at these specified pricing targets. We gave them to you. I know some of you got in because I gave them to you, literally. During this area when it was consolidating, going down and retracing, I gave you these specific pricing targets. You had not one but two opportunities to get in. After you heard it the first time or after you heard it the second time. First time, second time. He dropped down in here and picked people up after they heard probably the second that second video I did, where you picked it up again, right? I know you guys got in. This was like I think a 40% right here. Overall, it was about a 70%. I got in early this morning to say, hey, alert, alert, everyone, pay attention. You're up 70%. I think that's great. Congratulations. Why? Because the previous price action within the main context here was about a 70% move to the upside. That's kind of repeated throughout. Kind of that general. That pricing dynamic achieved there was repeatable through the entirety of this price action. So you've achieved what kind of needed to be achieved on the whole. Okay, to push it, I don't see much of a reason to push it because there's such phenomenal price action here. There's such a demand for Dogecoin, and it's performing so incredibly well. I just tell you, it's performing so well, so beautifully that it's kind of setting the mark for the entirety of the field right now. All right. So that's just the truth. That is what is going on. As we look at the extension levels, I have a big yellow line at 0.975, 97.5 cents. A big yellow line at 97.5 cents. All right. I'm going to keep that at 97.5. All right. I'm going to keep that at 97.5, 97 cents, 97.5 cents. I'm going to keep it up there. So we're talking about the extensions today. I did promise I would also talk about Harmony One. Now Harmony One, let's just discuss that real quickly because Harmony One was a circumstance that we had given some pricing targets on. I want to update people. It seems like it's holding in and around above it, just above its golden pocket. Now people hit this pricing target here. Okay, heavily you hit this pricing target. At the 10.5, you hit the 10. They came down and picked you up all the way at the 10. Okay, you cashed out on that one at 32%. The threshold on Harmony One was about 30%. We discussed that. Okay, we took in the previous, and guys, just so you know, not just on Dogecoin. I do this on anything where I'm given a pricing target. We'll look at what are the previous, percentages that people are getting on the positive price movements up. What's the threshold of the market? Here it's about 30%. I told you this morning while this was going on, just that threshold has been met at 30%. We were still within this channel. I said, guys, the threshold has been met. And sure enough, look what happened. We met the threshold, the 30%. And so phenomenal. What happened? Okay, no problem. No problem. And it's just not a problem. That's not our problem to pick up. That's the management team's problem. Okay, and I don't want to say a problem. That's just the positive price action can be created on a phenomenal kind of group event, like Dogecoin's going through a phenomenal group event. They have excellent marketing. There's a lot of different things which can affect the price or the demand for it. Let's get back into Doge. And as we look at that, I'm not casting blame or doubt or anything. If a price goes down, it represents an opportunity to reacquire at a lower price. And so you look at this and say, well, that's bad. We don't like that. You got out and you called it. You called it and that was it. And look at right when you called it, London, the price just went down. Look at what you did. I didn't do that. That's the maximum calculated threshold. And not just, as you get into this, what's the, where does the math, hit kind of the opinion or the group mentality? Well, the math is the math. You're never going to beat the math. The 30% carried over here, you're never going to beat that. Okay, I know that. Okay, I know that as a fact. I think you know that too. So when we extrapolate over these pricing actions of about 30%, that's the cumulative there, fed in on the aggregate, fed into this individual price sequence. Yeah, I'm gonna tell you, you're not gonna beat the math. You can be angry at me or think that that's not the right way to handle What, me behaving with the price action? I mean, come on. Come on. It's about to break down. That's phenomenal. I'm on the air streaming, and anyone who took that trade, you know we were on the air and letting people know it's reached its threshold. Okay? Now, it was a little different, and I love Harmony One. I love the community. You guys are great. Management's been very, very kind to me. We have some great different groups. We have a great Discord, great people. And the Discord's for all types of hot cryptos, for all types of technical analysis. Go-getters. If you're a go-getter, you'll like it. As we look at the, just a place for us to chat. As we look at the circumstance here, what we're into is the threshold that was met. Because some people will say, yeah, but you called it in here. I sure did. I sure did. Why? Because in and around this level, and why did I call that this morning? Well, the coach is on the football field, and he has called it. All right, he has called it. He blew the whistle. Okay, it's time to head. It's time to head back to the shop. Time to head home. Everybody hits showers. Let's head home. Won the game, right? Why? Because at the 70% increase from the exact price target that I gave you, and it wasn't like, exactly as I told you. You hear all these guys say, exactly. Why? Because they'll say, oh, it's either going to go here, and on the bullish scenario or the bearish scenario, it will do this. So I'll draw the line here, I'll draw the line there, and if, of course, you have to remember if it does this or this, it might do this. And then they'll go back, and exactly as I told you, it was going to do this and do this. And it's like you told us 5 different options, man. You guys are always, when I hear stuff, it's like there's 5 different qualified scenarios of what this thing can do, and you're telling everyone exactly every day what it did. Wow, that must be fun. I mean, that's one way to excite people. The way I excite them is I give them a precise, calculated figure, a pricing entry. Okay, that's what we do on this channel. I give you a precise entry point. An exact figure, a precise, like it's 40 cents right now. Dogecoin is 40 and a half cents right now. Okay? 40 and a half cents. That's an exact figure right now, what it is. This thing that it props up here, the accuracy of this, right? I give you a figure just like this. I produce that with the program. Okay, I know how to use it. And I guess that premium package, I guess it helps me, get that together. And you do have to be careful when you use the program. And you guys always make your own decision. You go do your own work. You go make sure that I'm using the program right. I'm positive that I am. So, I'm sure that you're certain that you can use it as well to a degree. If you can use it better than me, hey, please train me. I would love to be additionally trained on this program. Wouldn't we all just love to sit around and be trained on a stock program or on a chart program? Maybe not, but I think I can use it well enough. Let's see what we got in terms of a projected price on the upside. So what we did do before we go into that is, I did call it off right here. I think the coach has blown the football field because the math supported my statement. And I brought up the football analogy because I said, do you guys want to sit here all day? I've been on for like 6 hours or something because it was a big deal because you're a new community. And I went ahead and said, well, this is the Dogecoin community. I gave you a pricing target. You picked up on it. A lot of people picked up on it. I think a lot of people in this community specifically picked up on it, wrote it up for 70%, etc. There just kind of wasn't a reason. The second time he picked you up, guys, there just wasn't a reason to really get off the train. It was like it was a positive upward sloping channel, and unless it really broke down from that channel, it's kind of like, there's no reason to get off this thing. That was a beautiful thing. If you look at the candle wick, look at this real quickly, you will appreciate this, and you'll see why that second pickup after you guys, about 8,000 people watched the video. Okay, he dipped down all the way here. Okay, he dipped down all the way here to pick up the price. Boom, pick up the price target. Beautiful. That's my price target. He hit it once here. I think people made around 40%. Then I think additional people, like 5,000 people, watched the video with a pricing target on it. Then he came down and was nice enough to pick up the pricing target again. And then immediately people just saw to the upside. And there just really wasn't a real reason to get out of this for a minute. And it's like people just held on and held on. And so I let it just hold on. I'm like, there's no real reason to get out of this pricing action right now. It's going up. So I didn't make a video. I didn't do anything. I'm like, people are making money right now. Just let them continue to make money. See what your threshold is. Gauge your threshold, right? That's how I got into a circumstance of, let's just measure this out so you guys understand. 75%, right? So that's the threshold calculatively, in terms of calculatives. That's the coach blowing the football, the whistle for the football field, saying, "Hey, you guys have had enough. That's good. Everybody need to kind of go home and rest." And I brought the analogy up because we could have sat here and played football all day long, maybe created a pattern or something else, or seen what it was going to do. But fortunately, since that time that we blew the whistle, you're looking at 18. It was about 18 hours, 17 hours, or 18 hours, and you didn't really lose anything. In terms of if you had gotten out when the coach blew the whistle. That was just the mathematics, okay? So let's see what else we have on the projected price on the upside. Now we have this blue line drawn. I keep repeating that and I kind of draw off of it, okay? Because I'm not real wild about the timing intervals on Fibonacci. I prefer to stay on standardized intervals. That's just my analytical approach. I prefer standardized intervals. Typically, when you get into Fibonacci, there's some kind of a breakdown on top and then an ultimate retracement lower. All right, you've gone through that, and I said at these price levels, I would like to see, at the pricing targets, I'd like to see a consolidation, and then you're going to feel like moving up. All right, and that's exactly what has happened. That's beautiful, beautiful price history. That's exactly what I said I'd like to see, and just me personally, because I had entered into a phenomenal trade here. I had distributed some pricing targets in line with just the program. The program generated those for us, right? It's not me with a pad and a paper or a pen and a paper. So that's just kind of what I would have liked to seen after this pricing target got met, which is phenomenal because that meant everyone was making money. Okay, that meant the pricing target worked out phenomenally well. Some consolidation, and then you're going to feel like moving up. So that worked out well. That's just what I would have liked to see. If not, per the strategy, in terms of a strategist, that's what I would like to see. Now, if it were to go down, that's fine. Why? Because at those lower levels, remember, we have more money. You double or triple down. It's not a problem. And it makes the higher levels. Now, it's still very, very important, guys, because if you don't have those levels, the price targets, you're not going to get picked up. You're not going to get picked up for the upside, for the 70%. Whatever your threshold is. If you want to make 20%, that's fine. You happy with 30%, whatever you are, So that's important that you have this price target. Whatever your price target is, they're important. The market maker comes down and specifically picks you up, right? He goes out of his way to pick up those orders. He delivers you coin at a discount at your requested entered limit order price. So that's how you gain a discount. That's how you get from the 45 down to the 23. Half price you're getting involved in this. It's one thing, I'll tell you guys, it's one thing talking about we want Dogecoin to go to $1. Phenomenal. We love that. It's another thing saying we'd like to buy it at 50 cents. Essentially you have the opportunity right now to still buy it at 50 cents. So, if we're having that discussion and it's going up there anyway, a lot of people may just say, well, shouldn't we just buy it now if it's there? Yeah, I'm just kind of geared. I like to trade. I like to be involved in the market, the dynamics, the technical analysis. I like people to, I like the discussions that go on. And I like the culture. I like the tech involved, the retracements, the positive price actions, the thrill of it. I just enjoy it. I have a lot of fun with it. So yeah, you still have the opportunity to potentially, I'll just say, aside from all this retracement and everything else, some people may want to say, well, look, you can still buy it under 50 cents right now. And it's at 40 cents right now. That's phenomenal. But you can still buy it right now for under 50 cents. So what's the big problem, man? Just buy it for 50 cents and wait for it to go to $1. If you wanted to sell then, you could. If not, who knows, it might go to $2. Okay, so I understand that. If it goes to $1, okay, from 50 cents or wherever it's at, I would rather be the guy who's able to, you're going to make a 2x on your money. You're going to double your money. I would like to get from this point to here up to the $1, and I would like to triple my money, okay, or quadruple my money. That's just what I'd like to do, because I'd like to hang my hat at the end of the day and say, yeah, I'll never forget that we quadrupled our money in between. Everybody doubled their money, we quadrupled ours. That just gives me, that's just what I like, and it's a little more aggressive, and maybe you don't need that. But in the context, I'm going to tell you guys, in the context of it hitting this price target, please understand this real quickly before you judge those statements. In the context of you going up to 45 cents and retracing to 23 cents, Okay? I deal with real money. So do you. From 45 cents to 23 cents is half of your money gone if you hold on to it. So at 41, yeah, I can, absolutely. Truman Jerry, yeah, I can, absolutely. Let me see, I can. I'll get into that just 1 second. It looks like any tips can you give to those who buy at 41 cents? Yeah, I can, sure. And I'm just giving those tips right now in terms of what it looks like between the retracement. And I want you to look at the previous price action. Okay, the previous price action indicates to us that there was a move in from the 13 cents on up to 45 cents. Beautiful price action, beautiful. And then we saw from 45 cents to 23 cents. Okay, so that's telling me that there's enough of a dynamic there that I need to be prepared personally, that if I'm going to play with kind of the hottest investment, one of the hottest investments around right now, I need to be prepared to have the mentality to be disciplined enough to say, you know what, I need to stack a double somewhere. And that's essentially what I'm looking at. This is volatile enough for it to meet the litmus test, okay, for it to meet my litmus test and to qualify for me to be involved in this. I need to be able to stack. If this is my original investment right there, I need to be able to stack another one right there. That's essentially, let's say that's what would happen. If you invested here, you're going to stack another one. You're going to double your money. Okay. In the process of doing whatever we're doing, I'm going to try and navigate this thing to where I stack this many of them. Why? Because as soon as possible with this, I'm going to take one of these, the original one, and I'm going to put it right back over here, right where it belongs. Okay? Right up here where no one's going to touch it, and that's fine. Then I have these, because it's already shown me that it can go up to $1 and retrace to 50 cents and wipe out half of the value of something. Not that it will, but that it can. It's just done that. 45 cents down to 23. So I'm going to stack something on the side. I'm going to work aggressively enough on this and chew through the technicals to where, yeah, I'm going to give pricing targets like I did. It's going to appreciate 70%. And yeah, I'm going to wind up just stacking. Maybe I'll stack two over there. Okay, great. One's already up. It's over there. Great. Now I've got two. I'm going to work with it. I'm not going to work at the full amount. I'm going to stack back. Then I've got, one more that needs to be made. Then I've got maybe one more that needs to be made. That way I'm covering myself on a risk dynamic, okay? I'm appreciating the risk dynamics of the situation, and it's a kind of a controlled, disciplined approach when there's this much volatility in the dynamic, and I know that the volatility is going to be there. I know the volatility is going to be there to where it should enable me to essentially to stack another one of these, okay? Another one of my original investments over there. And that's what everyone wants to do. It's going to kind of double. When I look at it, it's like it's just going to double your money. That's good. That's great. It's phenomenal. For those of the community that have been working on getting this to $1, for a lot of the, what do you want to say, the other ideological reasons to use it as currency, to have it go mainstream. You're setting the record books. This is the historical event for you guys. It's a beautiful story. You're holding up better than anything else right now. Okay? Right in line with our pricing targets too. I love that. You're holding up, you're exhibiting more strength than Bitcoin or any of the other altcoins. All right? That's beautiful. That's nice. So, and you're making 70%, while other people are not making 70%. And they're not even showing that you made 70%, guys. You guys got that, right? They're not even showing that you literally just made 70% on this trade. We'll draw it out again. I've done it 3 or 4 times. Yeah, you know that for a fact. Yeah, this is a nice little club, huh? Nice investment instrument, huh? So yeah, from the low to the high and around this area again, the threshold's about 70%. We called it this morning and yeah, that's good job, guys. Good job. Everybody just relax relax for the rest of the day. I recommended that. I don't know if anyone did it, but yeah, I will recommend it sometimes. Why don't you guys relax? Everybody just take a chill pill and relax. Let this thing do what it wants to do. And it's consolidated since then, so that's been nice. So you haven't lost anything in the 12 to 16 hours that occurred. You haven't lost anything. If you held on to the original trade, the target price, if you held on to that, and guys, this is for educational purposes, so you understand what is going on with a pricing action, what a targeted price level is, pricing entry level is. It's the price you want that you're going to get into, that someone might give you, like me, based upon the dynamics, based upon the computer platform that we're given here. All right, Binance gives this to us. All right, #1 crypto trading platform in the world gives us this program to what? To use it to come up with our pricing targets so that we can trade appropriately. All right, so that's fun. That's fun. That's what we do. That's what we do. So we're going to try and stack along the way because there's too much volatility in this market. And I'm going to let it be volatile, and I'm going to, jog in here, 70% trade, beautiful. Jog in here, 70% trade, beautiful. What's that? That's over 100% right there. People trying to get in right now in around 50 cents and get up to $1. What's that going to be? Well, that's about the same. That's actually a little less than what was just accomplished, and you guys realize this. That's less than what was accomplished in between this entire channel. If you look at the outline kind of Fibonacci, the hardcore colors here with the red, the green, the blue, right in here, the teal and the blue, that's less than essentially what's been accomplished within this level, as it has achieved kind of a channel, some degree of a channel within this the resistance and the support levels here. You guys realize that? What you're trying to achieve, and just wrap your mind around that, what you're trying to achieve in getting up to this big yellow line up here is less than what was just achieved in here. Believe it or not, guys. Less than what was just achieved in here? You betcha. Do the math. 70%? 70%? Unbelievable, huh? Very different way of looking at things. Now, I guess you gain the stigma of getting to the dollar. That's fine. That's beautiful. That's a nice thing. But you understand also kind of the need to take advantage of these issues, particularly if you're involved in crypto and you're heavily involved in wanting to be, just being involved in crypto. It's a nice thing. You enjoy that. You want to be involved in it. It's the essence of trading. That's why you're in the market. You guys may have grown up around the market. Your parents may have been involved in it from a young age, or you as, also you have children and maybe you're teaching them or whatever you're doing. That's why we're involved in the market, because we understand the dynamics of what's going on here. We want to know how to capitalize on this. We want our pricing targets. We get them and bam, we're happy. We get this breakout of the bull pennant and bam, we're happy. 70%. I mean, that's nice. If I hadn't woken up at 3 o'clock in the morning and literally been there with you guys along this way and finally said, okay, great, the pricing target was hit, we're out. The coach has called, he's blown the whistle, it's over, right? And I said, someone else may get on the field now, but I said, do you want to play football? Because if we would have kept going all day long on this just to see where it was going to go, I felt like literally we were on two-a-days or something. Summer heat, 2-a-days, just grueling through football practice. Like, we don't have to do this, let's relax. So everyone got a good break. We appreciate all your support, guys. We really do. If you guys like this video, give me a thumb up. If you guys would like me to continue the stream and give you some pricing extensions here, if you'd like some extensions and for me to talk about the different levels, you can just give me a thumb up, and that'll let me know that you guys are paying attention and you want me to give you that information. I appreciate you being here and being a loyal subscriber and putting on notifications so we can bring you important dynamics like pricing, entry points, 70% trades, etc. We do that all the time. That's what we do. The more you pay attention and the more you're involved with us, you'll see that. I do have a question that has come in from Tom and Jerry. It says, any tips you can give to those who buy at 41 cents? Okay. Yeah, absolutely. You're at 41 cents right now. So you have decided to take this upon yourself and you're betting on the upside, Tom and Jerry. That's a person. I appreciate the support for the channel. It makes a big difference if you guys support the channel. It's just a validation for me. It's kind of like a thumb up. It's just a validation for me that we're making a difference in your life. And we'll be happy to feature you a little bit and get into that. But it's just a validation for us. It's not about the money. It's just a validation that we're making a difference in your life and that you're able to absorb the trading philosophies and kind of what's going on. And you're able to participate in the market like an ordinary member of the market should. And it's not always easy because you're hyped too. Everything's hyped. Everything has an angle. Everything is it's not an ordinary condition. It's like almost like you feel pressured, or not necessarily brainwashed, but you feel like some extreme psychological pressure at times. It becomes kind of sexy and attractive for you to get into something that's already going through the roof. That gains attention. It's like that contravenes normal market principles. So you guys know that. Getting in right now, I don't think it's necessarily a bad move per se. Okay, I would have preferred. Those are my headphones. Excuse me. I would have preferred that you had gotten in line with our basic kind of theory, which would have been around here at the 34, and you would say, well, that wasn't a pricing target that I announced. Okay, at all. I didn't announce that. I said it's over for a minute, right? But it would have been nice at 34. You didn't, so you're at 41. So yeah, the tip that I would say is always, and this will always be repeated, always have backup cash for lower levels. If you're getting involved at all right now, please always have cash available at lower levels, because you never want to run into the circumstance where you feel like you are overexposed, okay, and you're over leveraged, and you ask me a question, you write me something in my Discord, you say, London, I'm so sorry, I need to talk to you. And I say, what is it? What is it? Tom and Jerry, what is it? Tom and Jerry is the guy who posted this question. Well, the problem is I got everything at 41. And now I need to get out. I cannot get out. Okay. Time out. Do you have any backup resource money? No, I don't. That's all the money I spent. All the money right here. Okay, that's the problem. You can never, and I have this discussion with everybody, it's not a comfortable place to be in. Okay? That these are not the types of investments that you should go all in at the top. Right now it's at the top, essentially, of the intraday on the line chart. Okay, you did have a price movement up to the 45. Okay, so you're still below that 45 on the candles. Okay, so you still have some room to grow, but you're at the kind of the upward trajectory here. And this is, I'm not going to say this is concerning because it's such a phenomenal investment. I will tell you that typically, an upward traded channel like this. I'll just click on this. Typically, let's see, where you get some kind of a relative consistency amidst the resistance level and the support level, kind of a diagonal channel. Typically, now that's not typical with Elon or typical with the group dynamic. There's a ton of soldiers, digital Doge soldiers out there, guys, spreading and tweeting and doing all types of things. Typically, this is a bearish scenario. Okay, typically it'll run up and it will spill on out. Typically. But this thing has legs, all right? And in terms of the ability for it just to continue to go up, typically this will fall out. Now, that's just typical. I wrote that into the Discord and to some people yesterday, and I just said there's no reason to really get out of it. I'll say that now. There wasn't a reason to get out of the trade. In fact, it was streamlined, just laser lined in the middle of this channel, just beeline straight up to the top of it. So if you get in around this level, I'm not going to say you shouldn't. I'm going to say that's fine. Pepper in your money. Pepper in just a little bit. Tom and Jerry, whoever else. If you want to get involved, just pepper in a little bit of money. Just a little bit of money. As you go, if you start to retrace at all, then you'll be able to invest more money. Then you say, okay, now in line with normal market principles, I have more demand because the price is going down and becoming less expensive. At extreme prices, a demand curve. Extreme prices, you don't have any demand. Okay, there's no demand. As your price comes down, it becomes more reasonable, a little bit less expensive, just a little bit less expensive. You have more demand. Okay, so that's just making sure that you're complying, that your mental framework is in line with market principles. If it's not, the market maker is the exchange, the whole overall market's gonna wash you out. I guarantee it's going to wash you out. You may have gotten in early at a very low price, and that's a different scenario. You're not trading. If you trade and you don't pertain or you don't obey, if you don't behave in line with the market will make you obey it. If you don't obey the rules of the market, it will wash you out. I mean, that you can legitimately say that. A lot of people do get washed out. I don't like to see that. People overexposed at top levels. So anyone involved right now in these levels, I just don't want to hear from you later on. And it's not that I won't talk to you, but I don't want to hear the story. It's just it's not nice for me to hear the story that people got over involved at a high level. Right now, it's a relatively high level. So just pepper it in. Now, all that's going to achieve is the fact that that's not advice. That is a trait that someone who is literally in line with market theory and strategy, down to a demand curve that you would learn about in your first business class or your first economics class. I have an economics degree from Duke. All right, I have a big financial history with, lead analyst on a $1 billion project working across the table from Harvard endowment. Okay, so I've done big time figures. I've done big time analytical work and investment packages. Worked with $1 billion concerns. It's just normal for me now. So I can bring you these analytics and let you know just normal market procedure is wherever you're involved at right now, always have. If you're getting involved, always have double and triple down that later on. To be able to spread your risk, okay? You de-risk your portfolio you're holding. So that's the best answer I can give there is always have that resource amount of cash below to be able to acquire more, right? You guys know that. More coins at a lower level, at a cheaper level. That ensures you're operating logically in terms of the market. So we've drawn out the extensions. I don't know if you guys want to learn necessarily what the extensions are, how to use them. We can go into kind of how to draw them. I can teach you guys something like that here or in the Discord or something like that. If you guys need like any kind of sessions or any kind of like instruction like that, I'm happy to go over that as well. It's just really easy stuff. And you guys just let me know if there's anything else in the comments that you would like to, or super chat. I can see those now, thankfully. But let me know if there's anything else specifically you'd like me to address. And I'd rather address it now, much more now than later on. You say, well, I put all my money in here. You were talking about it. No. Ask, just ask. Let's see what we have from Eggnog Delicious. That's nice. We love eggnog, huh? Thank you, sir. I appreciate the contact. You helped me keep an achievable exit strategy. All right. Reminding me not to be fueled by others' hype and euphoria. That is exactly what we want to hear. I love that, man. Thank you, brother. That is beautiful. Congratulations. That's phenomenal. I'm going to read that again. Thank you, sir. I appreciate your content. You helped me keep an achievable exit strategy. Good. Reminded me not to be fueled by others' hype and euphoria. That's so great, guys. That's just critical. That is discipline. Now, see, he's talking about operating by some degree of a market theory, a market strategy, supply and demand, basic principles that as you start, seeing, and it's not just, we call him Eggnog Delicious. He's a Christmas guy. He loves Christmas. He's probably going to have a good Christmas, don't you think? He's getting out of the trades at the right time. So that's really phenomenal. But yeah, as soon as you stop operating by ordinary market principles and you start taking into account, when it turns into your cell phone has a ringer on it or a notification. You're getting lambasted from Webull and Voyager and Crypto.com and all these other different groups, right? Yeah, they're all sending you information. It's going up. It's 40%. It's 50%. It's 70%. That's the market maker just assaulting you, right? Essentially, he is throwing all that out. The exchange is throwing all that information out to you to what? So that you'll buy it. You understand that? All that stuff is all those notifications are being thrown at you so that he can make a market out of it. People have bought in at lower levels. So if you bought in at lower levels, then that's fantastic. That's about the time for you to start to unload, typically. Who are you going to unload it to? Probably the people that the exchange and the market maker are going to go and advertise it to, right? Why else would you buy it low? You allow the market maker to go fulfill his role, the exchange to fulfill their role to take it out and sell it for you at a higher price. You see that? When the market maker comes down here and hits our target exactly, when we give you that target around this time frame, when we give you that price target and the market maker comes down not once but twice after you watch their video, okay? It was nice because the ones who watched the first video, you had it here. The second video, you made about 40%, up to 40%, whatever your threshold was. On the second day there that passed, people, about 5,000 more people watched the video, got the pricing target, and bam, they got picked up again by the market maker. I mean, that's a nice deal for the market maker to pick up twice. Very nice. Very impressive. So that was a nice ride up into this point. And it got to, you have to say it got to the point, it was just like, it was a nice little run here. It had some velocity to it. You know, and it was nice to watch. And I woke up and I was like, yeah, we need to talk about this because I had given you those pricing targets. I was like, we have to go live. We have to do this. It was like 3:30, 4:30 in the morning. You guys with notifications, you guys, you tuned in. The loyal crew was like up. I was like, man, you guys are awesome, huh? And we have some internationals too, from Australia to all over, to Fiji. We've got, people in China and Russia and, Saudis. We got Arabias in who knows, all over the place, Dubai, etc. So it's nice to have you guys. I know you're all up late or up early, what you're doing, but we're going to get into extensions. I promised you guys we'd get into extensions. You guys hit those like buttons. I appreciate that. Those thumbs up, so you wanted to hear about it. So let's get into it. There's a crew here that wants to hear about it. Now, as we look at what is an extension, all right, I want to educate you in terms of what an extension actually is, okay? Now we know the calculative events, okay, that are in line. Let's bring this out, and I do bring this up. That just remember that I said this. Typically, an upward diagonal channel, kind of an upward, supported where there's a buyer support that's increasing. You have higher highs and higher lows. As you look at this channel, typically it's bearish. Typically it wants to fall down, not severely all the time, but typically it wants to break down. This one hasn't wanted to break down. I'll just tell you that Dogecoin doesn't like to break down at all right now. It is the beast, right? It's the market extraordinaire. It is the one that everybody's referring to. It just is right now. It's turning into the one that's going to write the book for this year. So let's go ahead and draw the Fibonacci retracement, okay? And I'll just remind you real quickly, what the retracement is, kind of how it works. We don't want to be on candlesticks when we draw these. I want you guys to be on lines. All right, be on your lines. There's a reason I stepped this up from the previous one. The previous one was down on this. I moved this one up. All right, there's a reason I did that. All right, I don't want to fully discuss it here. It has to do with the fact that you just set a new interim higher high. I'm moving to the next interim level here. And that gives me the full coverage on the top level. Okay? The full amount of this 23.6 retracement and it along with the top level price action, which seems to define this channel within which the price is moving right now comfortably since we got off the stream from this morning. Okay, nice channel, right? Since we got off the stream, this was when the coach blew the whistle. It's been 12, 16 hours and you've stayed in this channel. It's reached a zone which we would qualify about then, afterwards, etc., that we would qualify as being worthy of investing in, okay? Worthy of investing. Now, it reached it here. We got off here, etc., etc. This would be a pricing target that we would get into in and around this area, okay? Peppered in, real light, $100. Nothing big, just $100. I say that because I want to build in your mindset, again, and we'll go through the extensions in 1 second. I want to build in your mind market theory and market strategy that you don't have demand at the higher levels. I'm saying you have to get into this green at all. Like think of the green in your money. Red means no money, right? There's a reason it's on top. Red means you see this price action all day long. If it's green, it's going up. If it's red, it's going down. This top level in the red, we don't have any money. Okay? We get into the green. Okay, in the green we have some money. Market maker came down into this area and got some orders, right? So that's to be considered. Stay out of the red, and it's real easy to remember. Stay out of the red. Now I'll draw this down too here on the candles. You still pick this up twice, so I don't really have to go to that new different stair step, interim, cross interval analysis. I don't have to go to that. You guys will just deal this way as well in tandem there with. It's not going to make a big difference because the candles cover us. After we got off, we were covered down to this first level, which is a better price if we draw it originally the way it was. Down to 34 cents, 34.5. Market maker came down and picked these up. Same way he did on Bitcoin. I'm telling you, in a move that everybody saw. Okay, like everyone, I'm just going to say within my group and that knows the strategy that I have been discussing with people, everyone very much saw the fact that Bitcoin decided to just shred down into the, shred down into the level. And now this was before, let's just look at this real quickly because this drives the overall market, okay? You guys kind of need to know what's going on with Bitcoin. It's just another pricing example, something we can look at. Talk about this Doge extensions 1 second. All right, when Bitcoin took this huge journey like this and wham, in one day, in a few hours, within a period of an hour or so, decided to come down into this green level, this green area. Everyone was like, what is it doing? You remember that, right? Everyone's like, what in the world is it doing? All right, well, it's coming down in here. It's coming into the green. All right, that's a further confirmation of the trading strategy that you're listening to. Why? Because at this level, yeah, okay, that's fine. A little bit of demand because it's too expensive up there, right? Yeah, it's too expensive. So in the green area, we have a little bit of support. So people put in little buy orders right here. If there weren't any buy orders here, he wouldn't have dipped down to that level. You guys understand the market maker's job is to get the buyers, okay, and get the sellers together. All right, you're buying at this level. He went in and picked up those orders. You bought, then he took out the market and he went up about 15% and he let you sell it to some other people right then within 20 minutes. All right, same philosophy. You get to see it front and center, directly going down. You see just a beautiful trajectory down, and it was just a dip down. Market maker, wham, picking up some orders and throwing them back up for some major cash. And Bitcoin in around 50 grand. That's not bad. 10-50% on every 55. 50 grand you got. That's okay. On every 51 grand you got, 53 grand you put into. Between 51 and 53. Yeah, you made a quick 15%. That's okay. That's good money. That's good money. So that's the same philosophy that gets us in at this pricing target here. And it is just a reconfirmation of business principles. At an extremely high price, you're not going to have a demand. You guys know that. So at a more reasonable price, like on Dogecoin, when it hits this 34, it's a little more reasonable. So yeah, market maker came down there and picked up somebody's orders. Look at this. Yeah, we got off around here. You know my strategy, right? Yeah, you know my strategy. What is it? Don't invest on top. The next layer, you have some money available, peppered in. Just a little bit, maybe 100, maybe that's 100,000 to you. But you're willing to double down in the next area down. And then what happens? We are done with we're processing this. I say coach has blown the football, right? He's blown the whistle for the football. Everyone's off the field. Relax, go have a good day. But what do we know what's going on? Well, little orders are being set, right? Because this is the first area it's reasonable. You're in the green area, you're off the really expensive part, right? This is the first area we have any kind of real kind of demand. Otherwise it's too expensive, we don't have any demand. So we have to operate within the dynamics of the market, right? As it becomes less expensive, let's say less expensive, it's more approachable. It makes more sense for us to go ahead and delve in and say, yeah, fine, we'll put a little bit of money into it. Not much, just real reasonable. It's still kind of expensive, right? But that lets us participate if what? Well, see, we're into this. If it decides to go up, we have some participation. You see that? We have some participation, where otherwise we could have just sold out at the 70%, which was the threshold. That was the calculated threshold from our previous, our delivered, exactly precisely delivered price targets, right? This turns into another price target for us. I didn't have to publish it. You guys know the theory by now, right? Absolutely. Now you have to draw your lines correctly. We'll practice on that. I'll look and see what you guys are doing. But that's that level. Now you start to see. Now you can do this on your own. That's your own price targets. He came down here and picked up somebody. Like precisely, right? Like perfectly. You see that? Yeah, he did. He came down all the way to pick up somebody. After we got off from this morning, right? He's picking somebody up. Somebody. So that's a good thing. Somebody's mild amount, just probably a light amount of involvement. In case it goes up, why not? It's nice. That's what we do when we trade. We're participating in the market. That's why we spend so much time learning. And if you spend that much time, which I know you guys all do, spend some time with the discipline. Make sure that all your moves are really calculated. Make sure that you've got your trading strategy down. You have to have this stuff down. All right, you have to make this fun, and it's fun if you're doing well. If you have reserve capital, if you're functioning like an ordinary kind of market participant. Otherwise, if you're paying too much money here and there and getting in at the top, it's just not fun because it's not going to last. Okay, and I don't want people to be a story. A reminder of what went wrong. It's not on my watch, not in this group. We're a good enough group. I will do a few shout outs. We'll do that on the Twitter, just so you guys see that. And we'll feature a few people on Twitter. Let's see what we have. If anyone has shown up. Maybe not. Looks like Twitter is, there we go. Let's see. Just so you guys know, if you go to Twitter and you type in the kingdom, this is the crypto kingdom, okay? I'm London, this is the crypto kingdom. Type in the kingdom in the search box, go to the bottom, click on go to the kingdom. When you do that, and you'll have to click all the way down there and push go to the kingdom, all right? When you click go to the kingdom, we will come up. It's not going to be a person laid out. Okay, you're going to have to put go to the kingdom, all right? Click on that go to the kingdom, the drop down list at the bottom of the search box, and then go ahead and just click on follow. Also in here is a Discord link. You guys get on the Discord. That's our chat room. You can ask me questions. We can put together a session if you want to. We can do all types of things. I'm interested in assisting you learn how to trade and how to do well in the market. And I'll do that just through kind of a general education if you'd like to learn market strategy, just economic principles, whatever it is you'd like to learn. I'm willing to spend some time with you guys and make sure you're doing well because I don't want to hear bad stories. All right, so that's just the truth. That's kind of where my heart is at with the community, and that's what I'm purposed to achieve, and I know we can achieve it. So let's look back at some issues here that we were talking about, extensions. You understand the retracements, we just kind of started, we started going into the retracements. And the retracements are just the positive price action decides to retrace or achieve some negative price action, and we want to know exactly at what levels, specific price targets, okay, it's going to retrace to. These are the pricing targets. Now you need to be very certain how you're drawing these, okay? I seem to have a lot of success at this because I've done it a lot, okay? So I'm able to give very precise targets, okay? Very precise targets, so that's very nice. Let me see if I can get rid of this Fibonacci sequence here. That's the retracement, and we're gonna get into the extensions, okay? If you look at the pitchfork, you guys use pitchforks, you use GAN fans, whatever you're into using. I don't know how sophisticated you are. We're going to look at the trend-based fib extension. These are not necessarily fun to draw, okay? They're not necessarily intuitive to look at, but everyone wants to know, well, what is, and we can't do that. Everyone wants to know, where are we going? Okay, I'm going to give you two options on this. One is going to be, and this is the key of tonight's podcast, right? Or what are we? It's not a podcast. It's a live stream. It's not a podcast. Here we go. What we're going to do here, and guys, I've got the hedge fund previous experience. You guys know that I've got a lot of good things like that in terms of my financial background. I may not have all the YouTube extraordinaire skills down quite yet, but I will work on that part of it to make this as entertaining as we possibly can without losing credibility. I like the fact we have a small group. Sometimes you look down and it's like, well, it's not that great. It's not that many people. That's fine. That's fine. We're into the right kind of people. I'll tell you that. We're into the right kind of people around the world. Hit up those comments if you want to in terms of let me know where you guys are from. Pepper those up with where you guys are from before we get into the extensions. I would appreciate that. Let me know where you guys are coming from. A lot of people from all over the world. Put your country down in there. Show some love for your country. And then we will get into this beautiful, beautiful extensions, okay? I'm going to start off, okay? Start off. We'll have a record of everyone we've kind of taught this to on the extensions because a lot of people ask for this. So, the extensions, I'm going to move this right up to here. I'm going to move this right up there. Perfect. Now, the extensions are going to give us, and we'll experiment with this, although I don't think I like this particularly, nor this. Which we can. The other part I don't like is this. Okay. I'm going to go in right in line with my rule down to this. Now we're going to draw this. I said two of these. We're going to draw two of these. One is going to be on the lines, okay? One's going to be on the lines. The other one's going to be on the candles. And we'll go through the difference on these, okay? As we look at essentially, there's kind of an interpretive, the extensions first of all. I'll tell you, like BNB just stalled out very, very. Hey, what's up, Charlie? I gotta say, Charlie Abbott, what's going on, brother? We had a big shout out right now from where are you from? He says Texas, in the house, deep in the heart of. Brother, I appreciate the love. Thanks for all the love for the super chat. But yeah, he gets a big shout out for Texas, like loud and proud. That's just it. Period. I gotta tell you because that's important for me and everything else. Elon is in the great state of Texas. If you guys would like to come and visit the great state of Texas, we would love to have you. I'm in Texas. We appreciate Texas. We like all things Texas. So shout out to Charlie Abbott. We appreciate all the support. That means a lot to me because I know you're also supporting the framework of what's going on. He's supported Texas. He's also really supporting what's going on in the channel and the fact that that's a real big validation. Thank you, Charlie, for that. If you guys want to super chat up, we'll get a shout out and just validation for the station as well and let you guys know that, yeah, wherever you're from, that'd be great to read like that. In front and center, Texas, Star Texas, Lone Star State, they say. As we look at this, let me explain how these work, okay? A retracement. Now, typically, the bare bones, you're supposed to start with the retracement tool, okay? There's a little lesson on extensions. Typically, on the retracement or the extensions, you start at the foundation or the base of the trend, okay? You will go, the difference between the retracement and the extension is you're going to start at the same place. On the retracement tool, you're only going to have one leg up in what you're going to draw. There's only going to be one, okay? Now, that's on the retracement. You're only going to have one. Just from the base of the trend to the top of the trend. That's it. With the extension, instead, you're going to have where the trend starts, okay, to the top, down to the level of retracement. Okay? Down to the level of retracement. That's the difference. So it's going to be 1, 2, 3 points. I bring it out sideways here. I don't have to. Okay? It's just right in line with the peak down to the level of retracement achieved. All right? That gives you your extensions. Sometimes you may want to work a little bit with exactly where you put your first initiation of your trend line. Okay? That's just the truth. It can kind of vary depending upon the previous price action. It doesn't necessarily have to. It can. Okay? It can, depending on the previous action over here. If you have a lot of noise in the background, it can affect that. Here we go. Travis Johnson, what's up, brother? I've been here for 5 minutes and I can't express how much I appreciate, respect your maturity, attitude, and knowledge compared to the other YouTube goobers. Hey, cheers, man. Cheers to Travis Johnson. Hey, brother, I appreciate all that. Yeah, we're very happy that you're here for 5 minutes. It's some complicated stuff. It's not easy, but we need a technical channel like this. We need people who want to trade and people who need pricing targets. Yeah, man, you just got here for 5 minutes. I got to tell you, we hit these 2 pricing targets right here exactly. We gave those out, Travis. So it's nice to have you here. First of all, welcome to the Crypto Kingdom. My name is London, and you're welcome here anytime. Go ahead and hit our Twitter up. I'll give you that information here in a minute. But yeah, join up. There's some real great guys, strong dudes. Everybody is in the trading zone. But yeah, just so you know, we hit these 2 these two pricing actions right here, targets ahead of time, gave them out 70% this morning. We were on for a while this morning and finally called it quits at 70%. So that was phenomenal. Great to have you here. I appreciate your support of the channel. Thank you for the validation. That's big validation. Thank you so much. That means a lot. Thank you, Travis, in the house. Thank you so much, brother. Really appreciate that. Yeah, just stick around for a while. You're going to learn some great stuff. We got a lot going on here. It's a good channel. We're happy to have you and everybody else. As we look at the triple nature, okay, of this, from the initiation of the trend line, the base of the trend line, up to the peak, down to the retracement, down to the low. It's a triple hit for the extension. When you draw it, bam, bam, bam. It's not intuitive, guys. You'll have to play with it. I just tell you, it's not real intuitive on. They could make it easier. I tell you that they could make it easier in TradingView. They don't. They just don't. What this gives you, and what I do is I bring this down to prove a point. If I collapse the entirety of this pricing action all the way down to the bottom, this level here is 1. Okay? If we retrace the full amount, this level here is 1. Okay? Now, the purpose of the extension is to measure the amount or the percentage of your gain relative to your retracement. If we move this up, well, then that 1 moves up. It was right here when the retracement was fully all the way down. It captured the full amount of the price action. So getting back to 1, the amount of the original price action, would be just getting back up to 1, where your return is 1. When the retracement covers part of the action, well, then 1 moves up. You see the distance of the retracement. Okay, so that's what needs to be accomplished, right? That's it's pretty simple stuff, guys. It's relative to your retracement. What does your return calculation have to be on the upside to maintain kind of parity? I'll say that. It gives you these percentages. You guys can watch videos on it, etc. It's just real simple. Relative to your retracement, what levels are we looking at that are the most likely, without getting into calculations and mathematics, because it gets boring, right? And maybe a little bit too much. Maybe a little bit too much in terms of the calculations and mathematics. So let's look at the circumstance. Let me make sure that we are, let's see. When we get into this 1, understand that 1 becomes literally on the line of achievement, okay? From the base level to the top level, if we were to retrace, let's say in an imperfect world, we were retraced all the way back down to the bottom level, all the way back down to the base of where we came from. Well, then to get back to 100%, essentially 100 or 1, the full amount of the upward pricing action, we'd have to get all the way back up level, right? If we had retraced all the way down. That's what this represents now, because this figure is 1. But see, it's going to go up with the amount that was saved by the positive action of the price in line with kind of an abbreviated, let's say an abbreviated retracement, meaning it didn't have to fully retrace. Now let's go on this, you'll really get it. Okay, now you guys get it. If we lift it up and if there was no retracement at all, if it's just flat line, well, then we're going to experience essentially a double of it, okay? Straight on up. Straight up what, okay? From the original value of the positive value of the pricing action. Okay, just from here to there. You get it? You got it. Very simple. Not necessarily intuitive. They're not easy to draw, okay? So they're not necessarily easy to draw. A little bit complicated, but not necessarily complicated. You get credit for your retracement being brief, okay? So it gets a little more difficult the deeper, although there's kind of a sweet spot in there. The 0.618 is kind of like the golden ratio. So for long-term growth, okay, for long-term growth, for the long-term growth, you get some credit for going down into the golden pocket sometimes. We'll discuss the golden pocket, the 618, okay, 61.8%. So on the extensions, you're not going to get, I'm going to say you're not going to get much credit for not going fully into your extensions. Let's start there. Bitcoin has been having this problem, all right? And to the extent we kind of have this issue going on right now, and I think we can conquer it with, but it's not irrelevant for us to discuss this, because Bitcoin has had this issue where there was just kind of a relatively recent kind of, just a touch higher. Remember when it went from 56 to 61,000, Bitcoin did a while back here. Just kind of barely beat it. This time, we beat 61 to 64, barely beating it. You don't get a lot of credit on your extensions, on your Fibonacci extensions. These are pre-calculated extensions, guys. A lot of people, if you look at the Binance coin, I would recommend you do some extensions on the Binance coin, because it has just been rocking through. Okay, on the Binance coin, you're literally up into these levels. You're already, it's when you draw the trend line out and you do your Fibonacci retracements, you're already up into this zone. Just so you guys know, you wanted to reach, or you want to reach in around $1. BNB is like up into here. All right, nothing has been able to stop that. Nothing. I see Charles Abbott wrote another real thing. Let's see, real quick thing here. I want to do a shout out to Charlie. Charlie, we appreciate that. I'd like to know where in Texas you are. You can hit me up on Twitter with that, or where you're at in Texas. On the 5-minute chart, 11:25 to 11:35, the breakout to the retracement is 618 on Doge. All right, he's hitting the golden pocket. He's hitting the golden pocket. So he's talking about exactly what we're talking about right now. That 618 is the golden pocket. Okay. So that's great that he brings that up, and it seems like Charlie's going to be an excellent addition to the community. He understands what the golden pocket is. He's 618. He's already in the golden pocket, guys. Get to know Charlie. Charlie may be a technical community director. We appreciate that, having some people in here that know what the golden pocket is. The golden ratio. It's a key figure, okay? So you kind of understand that you get credit for not being too deep in here, right? But there's kind of a sweet spot in here as well that you can operate with and kind of achieve a good trajectory, a good growth pattern, something that's sustainable, right? Something that reflects what you would anticipate ordinary market technicals. So as we go back up, when I say that, I just brought this up because, as we look at what is 1 or what is 1.27, positive price action relative to the degree of your retracement. That's it. Real simply put, that's it. You get up to 1. All right, well, that includes, it's not a full double of this and that. It includes kind of your retracement. That makes it kind of relative. That's it. That's the simple way to look at it. We use this because we want to know how high you can go. You had a little bit of a retracement. Now, how high can we reasonably expect to go? Well, a sweet spot, a sweet spot is what Charlie just wrote in on. Okay, and thank you, Charlie. Another shout out. We really appreciate the validation, brother. Like, this is the validation of the channel. It means a lot to us to know that it means something to you guys worth validating, because we spend a lot of time on this stuff. These are kind of the late nights at the office on the equity fund or whatever we're working on. I know a lot of you guys have financial backgrounds, etc. A lot of you guys are really good traders. But yeah, what it gets like, you're working on a project is late at night. That's what we're doing here. We're trying to cook for you. We got up early. Got up at like 3 or 4 just to make sure people got in on that trade correctly and knew what was going on, and just we decided to bring that to you. That's the level of commitment we have. I want you guys to do well. Period, man. I feel I want you guys to do really well. So as we look at this, it kind of topped out, and I'll say this is not ideal, because it topped out at as we look at, let me make sure we have this previous level correct here. Where is here we are. And you get into these issues in terms of exactly where and why you want to draw what. Okay, now we're just very particular in terms of drawing things that are consistent with the principles of what you're trying to achieve. We do not go by, and I just tell you, we don't go by, but we could, the candles right now. We draw on line charts. I'll draw both. We'll try and get through this quickly so you guys can understand the difference and how dramatic it is here. But we just barely got into this, which is what? 0.618. Okay? 0.618 on the extensions is the 43 cents. That's about what you got to today. All right? Given the retracement. Kind of like a golden, the golden ratio. Yeah. That kind of makes sense. Now, this is in no way limiting whatsoever. You can go on up to anything. You guys, you can break through any level. Any level. This is a nice level to have kind of gotten to. It's very reasonable. The problem is with Dogecoin, it's extremely limiting because you've been blasting through levels like no tomorrow. So, I mean, to even kind of say that we're going to apply a standardized rationale, I mean, this thing, I mean, if you want to project price out for Doge based upon what it has been doing, I mean, you're going to be getting up into the, the solid framework of, the 1.68. All right, you're going to be getting up into the 1.68 essentially very soon, unless it just completely decides to stay within a characteristic set of being really lethargic. Okay? And it can. And I do bring up these timing intervals because they do spread out. You guys will see a lot of different coins that you look at and they have a real aggressive uptrend in the beginning, right? This step 1, consolidation. Step 2, consolidation. Step 3, consolidation. Then step 4 starts to kind of round out and you always see that same pattern dynamic and then it just kind of falls away, right? It doesn't have to, right? We see the same dynamic here with Dogecoin. Positive action, second time interval, next time interval, positive action, little retracement. Third one, it's a longer period of time. This is a longer Fibonacci, it's the timing sequence of the Fibonacci. So it's a lazier time period to start with. You're still up and within the point 618, which is 43 and around 43. Your new interim high. Now on the candlesticks, it's not. On the candlesticks, you reached 45, you're retraced to 23. Almost a 50% literal loss of 50% if you got in the wrong time. I always tell people, and just understand, I always tell people, and please pay attention to this, that we don't buy anything with a tail on it. And this is real simple. For those of you who are new to investing at all, just understand that we look at this like this. Whenever you're looking at anything that you're buying, all right, we like to zoom in and we like to kind of discuss, and we kind of make a joke about it, but it's not much of a joke. Just always remember this. If this right here is what you're looking at purchasing, because I'm bringing this up in the context, you see a lot of the pricing actions which move like this, right? Yeah, a lot of the pricing actions move like this. And you'll see right in here, let me go ahead and get rid of this. You will see right in here, I put like an arrow here. I want you to think of this kind of structure as kind of like a dog, okay? I'm going to increase this so you can see a little bit stronger. Think about it kind of like a dog, all right? There's a big arrow right there. The front of it is the front of the dog. This is kind of like a leg on the dog, okay? If you look at that, what do you run into? What is this part right here telling you? The price action. Let's just move this over a little bit. The price action is telling you the dog kind of has a tail, all right? We don't buy anything. If this dog has a tail on it, we don't buy it. Always do that. Look at it. When you see a positive price action like that, you just remember, no, we don't buy anything with a tail on it. Bam. If it's got the positive price action, I don't care if it feels like you're on top of it and you're inconquerable and that thing is going straight up with some velocity like you can't believe. Nope. It has a tail on it. You draw this out, you do something, and you catch yourself and say, nope, we don't buy anything with a tail on it. All right? So that's just, as you're into this phase, kind of a rule. Primer number 1, we don't buy anything with a tail on it. So let me get rid of that right there. There we go. Now we're back to where we were on the extensions. All right. Now you've reached into the where are we at? You've reached into the 618 at 43. That's right, 43 cents. That's reasonable. That's a reasonable new high. You're happy, right? Except for the fact that we know your candles, if we look at your candlesticks, that's not realistic. And we had kind of a contraindication here. We had a counter indication here. Because as we look at this, you're still not technically even at a new high. You had the 43, okay? The 45, yeah, right at 45. You had the 45 with the retracement back down to the 23. I bring this up. That's the equivalent of getting to $1 going back to 50 cents, guys. So you should be prepared to trade this and to exercise your judgment and your discipline. If you go from $1 to 50 cents, guys, if you could double or triple your money while you're getting up to $1 between here and there, which you may be able to. We made a trade for 70% today. Another one for 70% here recently. Clearly identifiable. Great price targets. Shared with everybody over the course of the stream, etc. Got up this morning, early in the morning, let you guys know. That's about it. You're about the threshold, 70%. And look, since then, 12 hours, you've just been sideways. That's okay. We're now asking the question, so that worked out phenomenally well. Congratulations to you and the community who did that. That's phenomenal. So you got up to this, past the 50%, past the 61.8%. And what is that? 61.8% of, and that's kind of the golden rule, the golden ratio, I'll say, the golden ratio. Golden pocket, they'll say. It's a key ratio for growth of price patterns. That's what the golden ratio is, okay? And it's measuring with the extensions, essentially the rise, okay, over kind of the retracement, okay, over the fallback. Now you could say, well, we want this to be here. And we really, because that is the true high, we want this to be here, right? Yeah, it's a difference. It's not that significant of a difference. You haven't quite hit into that 618 if you get into that. And it's nicer if you do hit that 618, or at least you're working toward that. But you see the difference. We're kind of at it. Let me say we're at a crux right now because that positive price action and that 45 is an outlier if you're not plugged into or tuned into the candles. I don't like to draw these on the candles. Okay, I like to draw these on the line chart. Okay, and on the line chart right now, you're hitting that key ratio. You're hitting that key ratio of 618, the one that Charlie Abbott brought up. That's crucial. That you're hitting that ratio. That's a golden ratio. And it's just esteemed like that. Like that's gold, brother. That's a golden ratio. That is fantastic. Good job. It's a crucial ratio to be established. So that is hit with this new interim high, which gives me more confidence in drawing this on the line chart, as opposed to drawing it up on the candles at the 45 or whatever it went to, which is still part of the story you guys need to recognize. We're still not at a new high. We're still not technically at a breakout. So this is kind of it's a technically frustrated dynamic here, because we have to change in between 1 and 2 time periods or charts to, line chart to candlestick. We have to make these changes on Dogecoin to see what's really going on. We know the story, and here we all know the story right now. Maybe a little frustrating to kind of articulate it because it's a frustrating story. We have a cross indicated, a downward trend from the 45 down to this current, most recent 42. Yeah, if we draw, a trend line, we still haven't even broken through that trend. It's not even an upward trend right now. So we have some cross indications. A little frustrating to articulate that level of frustration, but we can get through it, right? We can kind of parse our way through it. However, I don't know. It's just kind of disjointing. It's a frustrated kind of predicament that we seem to be in, and it's evidencing that. I'll just say it's evidencing that very well just through a consolidation. Very, very, I'd say it's saying it very, very well. Just a nice consolidation after the exit from the trade and around here and the stream saying the trade's about over. Okay, great. 70% is the threshold. That's been met. Beautiful. And now it's just, okay, what's the next move? What's the next move? Kind of seeing what you guys want to do with it. That's beautiful. That's very well. It's very well appreciated by a crowd that, well, not say by a crowd also that would have liked to get in at a better price. I wouldn't mind seeing a positive trajectory because why? Because they did come back down to this level. Remember, we went through the retracements. They did come back down to the level where it did hit on this one what would be considered as our primary price target. Okay, and we'll go through price targets again for anyone who's new. But this picks up on our primary price target. After we got off, exited trade, this picks up on our primary price target. Boom. At a light level. It's still high, but at a light level that allows for participation. Okay, it allows for some participation in what could be a positive, price move. And Dogecoin's just had nothing but that. It has sustained, and just remember this, guys, it has sustained better. It's performed better than I think any other top, we have to say this, guys, any other top 10, 20 market cap coin. It's performed better. Yeah. When Bitcoin was really getting hit the other day, the slight variation here. Now, there has been some increased volatility here. That's one thing you'll buy into. It held up better. Let's say definitely it held up better when Bitcoin was really dropping through. Now, it did lose. If you played this incorrectly, it held up better against that down move. Dogecoin became kind of the go-to kiddo then. It was like, hey, well, Dogecoin's holding up well. And it's, of course, it would be Dogecoin just holding up well. Unbelievable. I mean, unbelievable. I say that somewhat sarcastically. It's like, unbelievable, man. Dogecoin has just proven it to everybody that it's got legs like that. It's got the fortitude to just shine amidst all that chaos that was happening. Very impressive. Extremely impressive. Now, people will also say this, and we have to not remain, silent on this issue. Is that everyone wants to talk about the tokenomics? It's completely inflationary. There's huge amounts of problems, guys. Someone's buying up all of this inflated amount of excess coins. I'm not seeing that reflected in the price action at all. I don't think I've ever seen that really reflected in the price action, other than maybe people's stigma of it and they want to stay away from it. But no, it seems like on a consistent basis that people are seeing at least a stability. It was in a nice stable function for after its original run up for a good period of time, a number of months. It was in a stable kind of channel there. Now we're seeing stable activity here. Now, I'm not sold on the tokenomics or on the, exactly how all it's going to be applied yet. I like the pricing action. We do have a huge swing from the 45 down to the 23. That's a huge risk. Understand that if you're playing with Dogecoin, you need to have stacked probably something aside and definitely have insurance underneath you to cover and not be over leveraged. So pepper in very lightly at the top. This is a very risky investment right now. It's got a lot of huge, massive amounts of volatility to it. So that is just, that's the truth. You guys know that. When it's cutting down 50% of its value, and I'm saying, well, it performs so well against Bitcoin, that's an argument to say, well, come on. Well, I'm assuming you're not involved, really the same as with Bitcoin, that you're not really involved at the high level. This was really excessive. This was up, it was a trajectory which was completely calculative. Okay, it was completely expected, that return, the 70%, 100%. When you played this bull pennant that is a classic bull pennant, guys. This is a textbook, just beautiful bull pennant. I don't know how you could not have played that for a beautiful 70% return on up through the 45. It was just that was just something though from the 45 down to this pricing target which we provided in terms of an entry point. It's a lot of volatility. So yes, it's performed well, but I guess you have to ask the people that feel like they got 50% of their money wiped out if they got in at the top, if they really feel like it's performing well compared to Bitcoin. Because that crowd will say, no, we're still really far down. And as people are entering in right now and they're writing me asking, what about someone who gets in at 41 cents? What about the people who got in at 45? Now you're getting back to the point where that's not a big drop. That's the good news. Anyone who got in at 45, look, you're at 40 right now. That's nice, huh? Is it what, 10%? You're off by 10%. Everybody take that. That's beautiful, huh? Now, when you're down into the 23, and you went from 10 grand to 5 grand, or from 100 grand to 50 grand, it's a little bit more severe, right? It's a little bit more severe. So just understand these levels, the level of calculative kind of technical analysis we're doing is not for everybody. It's not always easy to get through. I try and run through it as well as I can with trying to understand maybe where you are at and kind of the general makeup of the crowd here. I know a lot of you are very advanced thinkers. You're very intelligent, and you can take all of it. If I get into something that's a little bit, yesterday I was doing like a cross variable derivative analysis. And some of this stuff, when I start to even get into it, I'm like, this is just a little too much to discuss with people who, you're not in an advanced graduate econ course. We don't need to cover this. I need to cover the basics of buy low, sell high. The basics are we accumulate heavier at the lower levels. We double and triple down as we go through the retracements. That means as it becomes less expensive, we have more cash available to put into it. Some people say you're going to ladder in, do a laddering approach. We double and triple down at the different levels of the Fibonacci. Okay, on the retracement, we double and triple down. We make sure we have a multiple, a higher multiple of a multiple of a multiple of multiple, and that we're heavyweight on the downside. Because ultimately, if and when this were to go to the extreme downside, we're going to have the cash on hand to take advantage of market conditions which allow an extremely low cost basis, okay, which allow an extremely advantageous acquisition, okay, in terms of price. Very advantageous acquisition in terms of price. Okay, that's the resource foundational money that's going to be available always at this level. Okay, and we only participate in things that we're certain, at any kind of a heavy level that we're certain long term, we're willing to participate at that level. That's a strategy used by some of the top investors in the world right now who are involved in the crypto space heavily. And I'm talking top investors, you guys know of them, BlackRock, competition, I'll say, $3 to $6 trillion, willing to throw in $100 billion, $500 billion in and around different asset classes. So very sophisticated kind of stuff. So on this retracement, you have already achieved the 618. Okay? After a retracement event, that's impressive. Okay? You also have what's kind of appearing to be kind of a cup and handle formation. So we can get into that. If you want to get into that, we can get into the different classical charts. I'm not real big on this right now, given its exact formation and what has gone on. I don't like, guys, we had in here, this is just me right now, with the technicals. During this time period, we had some outages with Binance that drove this into this pattern. I don't necessarily like trading patterns. I would rather trade levels and price targets when I'm coming off of something with an exchange interference involved in it. If Binance was saying we were overloaded, we were just overloaded and we couldn't handle things, and we started, the price got volatile. We've heard that story before, haven't we? It just keeps coming up. Come on. They don't have servers. I'm sure there was a lot of traffic. I'm sure there was. But when that carves into like a tradable pattern here, while I appreciate the nature of key classical technical patterns, I just hesitate to call anything else like that. And I would prefer to just kind of let's take a look at the overall retracement and still keep in mind that this could head to the downside. So stay very lightly involved. That's just a risk mitigation procedure. That's just so that we keep in mind basic fundamentals of economics, that as the supply, we got the supply and demand curve, okay? Let's go this way from the demand curve. Our demand for the product's going to be greater the cheaper the product, period. If it's very, very expensive, we have zero demand. As it starts to get into something that's a little more reasonable, we'll pepper in some investments. Okay? As it becomes more reasonable, we will double down. And more reasonable, we will essentially double or triple down. Why do I say that? Is it to give you advice to go and do that? No. I'm giving you a framework so you can understand at lower levels, we accumulate more. And in instructional tones that you understand, at the lower levels, we accumulate more. Why? Because then we're participating in the market appropriately. Then we're acting as a rational, reasonable person in the market. We have more demand at lower levels, like a demand curve, which shows us, or basic business principles, at extremely high prices, we don't have any demand. We don't have anything for it. We're not in the market. Bring the price down a little bit. Like an ordinary market participant will say, yeah, okay, fine, a little bit. We'll pepper in some investments. Here's $100. Here's maybe $1,000. All right, you want to be a little more reasonable in the price. Okay, great. Well, now we can work with you a little more. That's fine. Now we'll double down. We'll make an order. Let's just say an order for twice as much. We'll give you twice as much money at that price. Or you want to be more reasonable. Oh, I see. Great. Now you're even more reasonable. Well, now we have more demand. Think about twice as much as demand. I bring up the 2 to 3 times, the double or triple down, to let you know that keeps us in line mentally. Mentally, that makes sure that we are organized in line with ordinary market behavior. You see how the demand curve, how that whole principle of market theory, market strategy, how that works when we're saying we double and triple down. And it's double and triple down because we're going to cover any of the exposure at the higher levels with a double or a triple down at lower levels. We're going to accumulate more volume at a lower cost basis, okay? Lower cost. You see that? We're going to have more volume, lower cost basis. We're going to essentially eliminate any other higher level because we're going to own a multiple at a multiple kind of investment level at the lower level. So it's going to be let's say this, for every amount of, what do I want to say, for every unit of the appreciation in the price, meaning every single cent that this moves up, when we have more volume at the lower levels, okay, when we have that much more volume, and we have multiplied from $100, let's say, to $200, to $300, to $1,800, or $600 to $1,800 to $5,400, when we have done that and we are that bulked up on the lower levels, it takes but a small move to the upside and all of the previous levels are taken out. We have that much more volume and we've achieved it at that much of a bargain. The whole idea of a market is to buy low and sell high. When we're buying high and we're putting in the full force and effect of an entire cash position that we hold, guys, we're acting outside of the parameters of what's reasonable in terms of market strategy or market participation. It's just we can't do that. And you'll get washed out. I promise you'll get washed out. Well, just this one time, because we're almost positive this is going to go. You just do it one time. Do it one time, then you'll do it another time. If you're just going to do it this time, you've already done it. You don't have the full amount of your cash position. You don't have reserves. If you feel like you have to go in here, best thing, you have the reserves. You can play lightly along with this, right? You have to have the backup foundational resource kind of money, just the base here. You have to. If you don't, you're not operating in line with the normal demand curve. You're just not. You're not expressing the fact within the market. You're not operating that, yeah, you're too expensive, zero demand. Well, bring it down a little bit. Okay, we'll start to play. We'll pepper in some, maybe $100. Well, more reasonable. Okay, we're going to double down. And that double down is not only in line with let's say, a demand curve, what's a reasonable expectation from a market participant who has more demand, okay, as the price drops. Not only is it in line with that reasonable expectation of a market participant and their behavior in the market, not only is that, it is also, okay, going to achieve the fact that you're able to eliminate risk through your increased involvement at the multiple, at the double or triple down level. It achieves that you're able to eliminate the risk of being involved at the higher levels. So it's in line with the demand curve, and it achieves the elimination of the risk at the higher levels because it's at the multiple. You see that? That's as clearly as I can state that, and probably as clearly as I've stated it in a bit, because I think we have a good group in here. Okay? Yes, you're operating like a demand curve. The cheaper you get, we have more demand. And we're doing it at a multiple, double and triple down, because at the different levels, because we want the insurance on the top side. Anything else that we've invested on the top side, we have to be able to cover that. With just a small, we need 10% from our base level here. We need to make a 10% on our base level. Great, we're going to do that on the 10% on the base level, and we wipe out everything else. You see, any other higher price activities. Any activities at a higher price, I should say. Okay? You see that? At the heavier invested levels at the bottom, we're operating in line with the demand curve, and we're providing ourselves insurance. If you don't have that insurance, if you don't have the resource cash, okay, the backup resource cash, don't play this game. If you want to play this game real heavily, if it's like you're in Vegas, I'd say that's cool. Okay, fine. If this is a Vegas weekend for you, that's fine. It's just more fun if you have the backup resource cash. Say, well, maybe I don't have the backup resource cash. You can still play lightly. Nothing is coercing you to get in and play at a really heavy level. In fact, you're operating outside the confines of what would be expected of a reasonable market participant. Okay, because you're going to wash yourself out. You're involved in something with high risk, first of all. You're not respecting like a double down approach, and that's what the big guys do. That's their strategy. That covers you on the top level, overexposure on the top level. We'll double down, in this area. We'll make it back. We'll get more volume at a lower cost basis. We'll make that back. Maybe we'll quadruple, maybe the amount of investment here. Right? That's what the big guys are. They're on, guys. They're just on with that strategy. So that's a long story short. As the extensions go in, let's just talk about. We covered the downside again for you new guys who just jumped in, and we reviewed it again, both on the demand curve and the insurance on the insurance level. That it makes kind of an abundance of sense for us to acquire things that way. If it goes down further, we will remember that, and at whatever level we're willing to be involved in, we always have that lower level because we still don't want to be overexposed to any one single condition or any one single position, I'll say, okay? Price condition or an overall, market position, I'll say. On the upside here, just understand any of these levels can be shot through very quickly. All right, we saw it go up to 45 and retrace 50%. Any of these specific levels can be shot through. It's already gotten up to the 618. All right, that's nice. The 618. That's kind of the golden ratio. It can go up. Let's see if it wants to hit 1. That's real reasonable. Okay, I'm going to say it's real reasonable here. If you can achieve up through what's the exact figure? 54 cents. That's real reasonable. There's nothing out of the ordinary for that whatsoever. 54 cents. That's real reasonable. I'll put a mark at 54 cents. Now the deal is you're gonna need to get an indication of how this wants to move after it's consolidated and been a little lazy. So anything that we come up with, necessarily is we just say, well, this is it. Let's do this. Let's do that. It's been real lazy right now, and you guys are going to determine. It is, it's shown. I mean, this is a beautiful channel. Typically, an upward sloping channel like this, confined within, a pattern. This is an upward channel, diagonal channel. An upward channel like this, diagonal channel, is typically very bearish. Okay, you'll have a level of. Let me get this right. You'll have a level of support, a level of resistance. Is trading essentially within this confined zone. Typically, you will see this spill out to the downside. Now, there's nothing typical about Dogecoin, or the fact that Elon can get in a group and immediately, bam, release something and have, a tremendous impact on the coin. Or dedicate some additional resources to it that I would imagine he has already dedicated a tremendous amount of resources to this coin. I haven't seen it drop with all these increased, have you guys? No. Have you guys seen it drop at all? And I'm talking about on a consistent basis in line with the inflationary component to it. Someone is buying up every ounce of that supply. So just build that in. And I'm not convincing anyone to invest in it. I'm convincing, if anything, obey market principles. It's high right now. Only pepper in some money, just a real light amount of money if you want to play this. And it could be fun. That's the one thing. We trade. That's what we do. It can be fun to come up with price targets. Heck, that was a 70% trade in the last 2 days that we came up with in and around here. This other one was a 70%. Bam, bam. A lot of fun, huh? Almost as much fun. You don't want to, necessarily just sit here and, even talk about like what are we trading? I guess we talk about that. But it's a good team from Tesla and all those guys. They seem to be doing well. Maybe they can come out with some better news. That'd be fun to go up on some good news that had some fundamentals. Wouldn't that be neat for us that are lightly involved? Again, lightly involved. Always with the downside, always with. And you'll just hear me say this, guys, because if and when it decides to have a really negative day, what have I said a million times? Just annoyingly so much. Well, you always have your reserve cash. You always have that baseline fundamental to be able to double and triple down, right? So that's where the bulk of your money is down below. It's not up in here. You don't walk into a poker table in Vegas and like, hey, here's the $100,000 from the savings account. Let's play right now. Nah, come on. You have a little lasting staying power on this. So the one, if you get to essentially a 100% on this, that's essentially the positive price action relative to the amount of your retracement. We're looking at 54. Okay, 54 is reasonable. That's just reasonable. So we can also lay into that. What I would say is we need to see the timing duration. That's kind of another factor. 54 in the near term. Let's see if it can get up over 54. That makes sense given the extensions. All right, that's just the bottom line. That's just the bottom line. It can be more aggressive than that. If it wants to go up to the 1.68 and just set it at 68, then you're looking at 72. All right. So I have the 54, I have the 72, and I have the 97.5. I have 97.5 carved out for a reason. I'm just going to leave that there. 97.5. Okay. So those are about the three levels that I think we need to be looking at, and I like those levels. I think they make sense in line with kind of the key ratios of what you can be expecting. So those of you who are involved, that's great. Now on the downside, I'm gonna cover that real quickly so that you're fully informed and we all understand exactly what this can do. And it'll be quick. This will be a quick part of this. But do pay attention, because we can most certainly, without a doubt, experience a 50% retracement to 24.9, from 40 to 24.9, or we can experience a 61.8 retracement, 61.8 retracement down to 20 cents. Okay, absolutely. Or a 78.6 retracement down to 14 cents. Okay. Absolutely, we can go to the 78.6% retracement down to 14 cents. From 40 down to 14 cents. Without any kind of a problem, we can do that. That's very easy. That's within the realm of expectation right now, guys. So when I talk about being lightly involved at the current level, because it seems to be, it just set a new interim kind of high here, at least on the line chart. When I talk about being lightly involved, it's because there's a realistic probability. Okay? There's a probability that you're going to experience, within it should be very soon. I just say I'll be surprised if something doesn't happen very soon. Okay? Reasonable probability that you experience a retracement and along the 61.8. I'm going to say that's 20 cents down to the 78.6, which is 14.9 cents. Okay, you want to turn $40 or every $40 into $14? No. You want to turn every $4,000 into $1,400? No. You see where this goes very quickly, and you'll put your stop losses in. You'll be an advanced trader. You'll do all this different stuff. I just prefer to be lightly involved. The money that you're going to spend getting in and out of things on a stop loss basis, I would prefer to keep that as kind of reserve cash on the side, tucked away with some discipline, knowing I'm not going to be super aggressive in the market. I know I have reserve cash. When the whales are buying up on the bottom, I'm going to be right there with them. All right, and my philosophy, the whole approach works perfectly down to this most recent event with Bitcoin. And I'm going to show you the whole philosophy as we double and triple down when I'm talking about these different levels. At the top level, no, I don't have any kind of this is just an exemplar. Just look at this. It applies perfectly to Dogecoin, Harmony One, all the different coins right now. So when this thing broke through, you'll see as this looked on the line chart, well, it looks like it didn't even break through to even get into kind of my first level. These are the tiers. Top tier, first tier, second tier. And really the top tier is too expensive. I have no demand there at all. All right? As I get into the first tier, okay, it's becoming it's at least less expensive. I'll put in a little bit of, I'll pepper in some investments here. I'll put some orders right here. Okay. That's my strategy. That's my market strategy. It's in line with the demand curve. Then I double down here, right? If I put $100 in or $100,000 in this area, I'll put 200 or 200,000, either $200, 200,000, whatever you're investing in. This level is going to be about, I'm going to take the whole amount, then I'm going to double that. It's going to be $600 or $600,000. Okay? What's that doing? That's gauging my mind with the fact that I have heavier amounts of demand at lower levels, at lower prices, and it's also giving me insurance because I can cover these these higher areas of participation, I can cover those with a multiple thereof at a lower level. You guys see that? The demand and the insurance. I'm behaving as a normal market participant and I'm giving myself insurance. Those are two huge goals. If you can do those two things, that's phenomenal, guys. You stand a good chance to make some money. You're behaving like a normal market participant. You're giving yourself some insurance. You're holding back some cash. That's discipline. That's a strategy. That's good. That's a good job. When you look at Bitcoin the other day, when it decided to just hammer down, right? And you saw on the line chart, it didn't even come down here yet, right? Now look at what they did. Now this is on Bitcoin, right? Yeah, they hammered down into this to pick up these orders. There are orders just sitting there. Orders just sitting there on the biggest, crypto guy of the block, right? Bam, market maker brings down all the way, shoo, pulls in to pick these up. Big surprise. Me, it's right in line with strategy. Look at the old tapes. Look at weeks of this style tape at the first level. This is when we start to have some investment. So you saw the market maker come down straight into the strategy, just beautifully on demonstration for you to verify that's exactly what happened. You guys go draw your own fib retracements on this. Go work up the just one or two. Watch a little bit of time on the previous pricing pricing techniques in terms of acquisition. So that's what we have here. If this were to get involved at a lower level here, what is our approach? It's very easy. If it were to get involved at the first level, well, we have a little bit of exposure. We're willing to pepper in some investments. This one, well, I'd probably double that. Well, I would take the whole amount, probably triple that. If it's 100, 200, 600, probably 800, 1,800, I'd say. Take the full amount. That'd be 900 times 2, about 1,800, then about 5,400, maybe 5.4 million. Maybe whatever the, 1.8 million. Maybe the scaled up or the scaled down. You may have different approaches. I want to make sure that you understand you're supposed to have more demand at the bottom. And not just more demand, $100 here, $120 here, $130 here. No, you need to have enough more demand to where you can cover your previous investments. Okay, it needs to be an exponential or a multiple of your previous actions so that you can cover yourselves, okay? And I know some of you guys want to play on a stop loss. Why not keep your cash? Why not hold on to it a little bit? Don't be overexposed. Take a hit of 10%, because I know you guys, you'll take a hit of 10%. Then what happens? Well, you take another hit of 10%. Then what happens? Well, you take another hit of 10%. Dang. That's no fun, guys. You don't last long like that. If you have cash put aside for these lower levels, you don't mind it going down. You're still having fun with a decent amount of money. With some money, you're having fun at these top levels, playing around and having a good time. Just pepper it in, just a little bit. And nothing when it's extremely high. Nothing unless it comes in and it reaches your levels. Have some discipline. Make the market maker come and find you. Make him pick you up for a ride. Right? That's what happened today. We have no demand in here. Well, look at the candles. Yeah, he came down here and picked us up. Cool, I appreciate that. Same thing on Bitcoin. Yeah, he decided to come pick us up the other day. Boom, the strategists, okay? The strategist with this theory, he picked us up. Boom, for 15% within an hour. Beautiful, perfect on every 53,000, on every 52,000. You're gonna make 15%, just bam. Very nice. Very nice. So as we look at this, same thing, in and along the top level of Dogecoin. Perfect. Picking up at that first level where we start to have any kind of an interest. So that's the idea. Okay, that's the nature of the double down, triple down as you go down. Insurance, you're gonna have insurance, you're gonna cover yourself. You guys are going to get burned on these, and some of you may be doing it okay. You may be doing it well in terms of the stop loss orders, etc. I just prefer to know that people have resource capital underneath. Please tell me that you guys don't ever stand a chance at becoming over leveraged or stuck in a position. I hate to see that, guys. I hate to see it. If you're great at stop losses, go for it. But it's just something I just don't ever want to see any guy that is around me, etc., not understand. You have your cash, your bulk funds at the lower level, because this is a nasty market, guys. It just is. It's nasty to the tune. We just saw 50% get erased from people who got in at the wrong time. And I just tell you, at some level, you don't know what is the wrong time, because the crypto market, it could be anything. Everything could just get wiped out within the next 48 hours. Is that feasible? Yeah. Is it like highly likely? Maybe not. Is it feasible? Yeah, it could happen within the next 48 hours. So, whatever your stop losses, don't get hit. I don't know. All kinds of problems with exchanges everywhere. Yeah, like every weekend, like this last weekend with Dogecoin, or this, what just happened in China with the hash rates, etc. Just be careful. Don't overexpose yourself. When things are calmed down in the valley down here, that's when the heavy accumulation goes on. And we're willing to get more involved and along the lines with good pricing, etc. Along the way, we're willing to trade, somewhat heavily. Something that makes sense. So that's what we're looking at in terms of the extensions. I've drawn this in at the 54. Okay? The 54, the 72, 72.9, right? And, I've kept that in, you can say around the 96 if you want to. I had the 97.5. Okay, I like the 97.5. So that's where we're at. Those are your extension levels. All right? I'm going to bring up Twitter real quickly and take a look at Twitter and kind of see, make sure you guys understand where we're at, what we have. It's been a long day for us, guys. Understand it's been a real long day. We got up at 3 or 4 in the morning. We had involved our name on the trades here. I just tell you, on this price action, we had involved our name and our kind of our goodwill on this. I'd given the pricing targets in advance on this. The market maker came and picked them up perfectly. So that was a circumstance where, precisely we needed to make sure that everybody was plugged in. We had given this exact pricing target, the exact pricing target prior thereto. Some people were involved in the trade, so we had to get up at I just made myself, get up and we're going to do this and, go ahead and just hammer into the facts there and make sure that people didn't get put sideways at all. So I understand that you make your own decisions, and that would be essentially impossible. If you go to Twitter, you get your own financial advice elsewhere, I'm certain. That's a good thing, because this is not financial advice. It's just kind of training. I say market strategy and market theory. So I've been a mentor before, recently in an intelligence school where I did phenomenally well, thankfully. Top of the school, 40,000 students. So it worked out well. I just worked very hard. The Kingdom, type in the Kingdom to the Twitter, okay? To the Twitter, type in TheKingdom. This is Crypto Kingdom with a K, okay? So type in the Kingdom in the search box, and I'm saying that because you have to pull us up this way. Go to the bottom here and say, go to the Kingdom. Scroll down, go to the Kingdom. Click on go to the Kingdom, all right? Click on follow, and we'll stay in touch. You can DM me if need be, and we can go through whatever needs to be gone through. The Discord link is right here if you guys want to chat up and stay in touch with guys that are heavily technically involved. All right, there's a lot of heavy technicals going on, and typically we're a little bit, we got a little bit more spring in our step. It was a big long morning, so I'm just glad that we capitalized on a 70% trade. Beautiful, and I know it's been doing that, but to get it precisely where the market maker is literally coming down. If you watch that video, just the candlesticks just to pick us up. All right, so that's phenomenal. That's what we like to see. That's a good few days as we break into kind of a new crowd here, and you guys understand this is what we do all the time. So it's not as exciting when we're playing on the upside, and you guys got to say, well, what do we need to do? We need to scale out. That's the next question. What do we need to do? We need to scale out along the way. I've kind of told you guys, like right now, very lightly involved. You've already hit one of my levels, and this is where you get in, right? So that means somebody's cleared out. Yeah. Okay. I cleared out when I told you guys, the coach blew the whistle on the football field, right? And around here at 70%, right? And this is the good thing about the strategy, because we're not holding on, waiting and praying that something's going to go the certain way it needs to, or maybe it's going to happen on the upside, maybe on the downside. No, none of that. Zero. We are not over involved at all. Our strategy perfectly handles this situation. Why? Because we reached a new interim kind of high here, right? We called the game right here. It was a 70% gain and around here. This, from exactly our price target we gave you ahead of time, it hit. Market maker picked up twice. 72%, 75%, yeah. We called that. We were live this morning just to make sure people understood. That was kind of the threshold. And since then, number of hours has just gone sideways. That's fine. Showing a lot of stability, and that's beautiful. Now, what happened in here? Since then, well, it decided to come on down and hit my investment level. At what level? Well, at a real light level. Real light level. All right? So it's within that range that I'm able to say, you know, strategist involved at a very light level. A very light level. If it continues to go up, that's the level of exposure. Isn't that beautiful? After getting a 70% with this, you see, this seems really reasonable. With a real light level of involvement, hitting again precisely upon the pricing target. That's beautiful, huh? That seems like a sophisticated strategy, huh? We're getting picked up like that. Yeah, after we exit, beautiful. We call an exit. After we call an exit, we're calling another entry. Bam. Because you guys understand the strategy well enough, you know that that's immediately, once this high is set, this Fibonacci is drawn, that's the entry point right there. Boom. Right? You see how it functions? You see how it works? And now it's ready to carry forward. Isn't that nice? Even now, you're able to say, okay, yeah, there's a level of involvement right there. So you exited, you're involved yet again. You're running into the end of what could be kind of considered to be, hopefully, the end of the reasonable kind of the frequency duration that you would hope. I don't trust these, I tell you this, I don't trust these Fibonacci time differentials too much. I don't put a whole lot of stock in them. But you do understand now we are involved on the way up, okay? The strategists are involved on the way up. I'm going to say the strategists because at some point you got a lot of people strategizing to pull this big boy, this Bitcoin all the way down to this level. People are like, excuse me, who are these strategists that have decided to just get involved because that's a heavy level of involvement. That's like big time whale money, huh? They're just going to come down here and pick that up. Market makers are going to just reach down on $1 trillion concern and say, okay, fine, I'll just pick those guys up real quick. We'll make them a 15%. That's just what happened. That's our strategy. That's just what we've been talking about for weeks. So it's phenomenal for Bitcoin to have exhibited that to people that yes, this strategy does work. I'm just calling it a coincidence. It's nice that strategy, again, here perfectly works. You got into our zone of investment. Otherwise, we wouldn't be investing. If you're just up in there, we exited 70%, we're happy, no problem. But you reach back down in here, that's fine. Perfect. Limit orders ready. If you guys don't have exchanges that allow limit orders, you need to change exchanges. If you're just ballparking this on your cell phone, you know, you're not going to play. You're not going to be able to play the game very well. That's what I would anticipate. Maybe you have a different experience. And in all of this, that's just what I would say. I would qualify everything. That's just what I would anticipate. Maybe you guys have a different experience. So I think you guys understand kind of the nature of what all is going on. Go ahead and hit up in the comments. Give me a shout out, let me know if you're new within the last. Let's do this. If you're new within the last like 30 minutes. To the crew here, to the crowd, put like a hand up in the comment. Just put a hand up in the comment box on the right in the live chat. I'd appreciate that, and let me know kind of where you guys are at. I want to shout out to Red Raider, big shout out to Red Raider and to Yoski, some really great guys that are helping run these mods. Just real solid guys in your community you can look to. We got some strong vets. We got some strong people. We got some, if you look on my Twitter, you'll see at the top here when you search for me, go, Crypto Kingdom, but type in The Kingdom and go to The Kingdom. And you'll see here the Discord, but also you'll see financial professional and former presidential advisor. Okay, that's me. So I've worked on a lot of big projects overseas. I'm in a lot of different areas throughout the years. Been very fortunate and blessed. And but we have a good background just overall. So it's a pleasure to be around you guys. You guys will enjoy the Discord. You'll enjoy everything about this whole deal. So it looks like we have a notification. Maybe we got a follower. Let's see what we have. There we go. We got a few shout outs to give to you guys so you meet the other members of your community, in addition to Charlie Abbott, okay, who is fantastic in terms of his support. I appreciate that so much. And Travis Johnson and Yoski. And Charlie Abbott, thank you for the two very kind, what I view these as, and the eggnog delicious as well. You guys, I just view this as something it's just a validation of the work we're doing. And that's very important to me to know that it's especially on a day like today where we probably streamed for a total of 10 hours. I wanted to make sure you guys got in and out of that trade, okay? Because we gave you the specific price targets, 70% on the upside, guys, beautiful. Now you see peppered in lightly here with the strategy, fantastic. This is the type of stuff that makes money. It's highly disciplined. It's highly calculative. We did kind of a variable derivative analysis this morning to calculate in this level of gain. When it started to move up, there was no reason to move out of it. It was in a channel, a beautiful upward channel that was just moving. It was typically going to break down, but it's not going to break down. Look at this thing. It's just moving on the way up. It hit our price target. Market maker picks this up and it's just solid, straight on up. Okay, fine, keep going up. That's what Bitcoin's been doing. Dogecoin has been doing, in spite of what Bitcoin has not been doing, right? And as Bitcoin was dumping, etc., this has shown a phenomenal amount of resilience. So congratulations. It's something fun to look at right now. It's setting the mark, whether or not anyone wants it to or not, it's setting the mark for the crypto space right now. It just is. And that's very exciting. So, okay, we have a few people that are new. Appreciate that. 1, 2, 3, 4, 5. What I would say is I want you guys to try and pick up on the Discord. Try and pick up, you new guys. Pick up just like Mitch did. Shout out to Mitch. Shout out to Tom Kelly. Shout out to Matt Boy. Shout out to Slowno. What's up? Shout out to Amanda. Nice to have you here, Amanda. You are most welcome. It's a pleasure to be in the company of a lady. Thank you. Shout out to Blue True. You guys who just joined within the last few minutes, you put the hand up. Go to Twitter and go ahead and find us on Twitter and get in touch with the community via Discord as well. Jump into our Discord room. You will find that you are around some of the smartest guys. We have a director, a social director there. We have a director of mining, someone who's going to be in charge of mining, etc., sharing that information with you. So there's just a good amount of technical skills and smarts that's going to be there. Type in your search box, you new guys, The Kingdom. And I'd recommend also if you could watch one old video. Pick up an old video that you think might describe some things, or it looks like it's a good example. Go through the investment strategy. Pick that up, and you'll get into kind of, it's just market principles and market theory, guys. And if you'd like a private session or something like that, just get in touch with me and we can discuss. I want you guys to learn and to be successful. Bottom line. We do need to cover. Let's see if we can cover briefly. And guys, I want you to pay attention to this because this is Harmony 1. Okay, we're very dedicated to Harmony 1. We love Harmony 1. It's provided incredible pricing action. It just has. And when I say we predict pricing elements, pricing actions, this yellow bar here, we predicted this pricing action. Bam. Okay, 30 to 50%. It was 30 is the frequency interval. 30% on Harmony 1. Harmony 1 was up 20x. It's having some problems. It's gone through this lethargy. It's gone through it on the downside. Now it looks like it's in a deflationary or an inflationary kind of stance, whereas I don't see this mimicked in Dogecoin. Very, very interesting. I see maybe the management needing to kind of pick up on this. Let me go ahead and mute that. As we get on into, we also hit this pricing target, which was essential. This morning I called this, so you guys know what we do on the channel. Turn on notifications and be ready, because we hit this pricing target here. And when I say that like it didn't really hit it, just know, guys, if I say it hit it, bam, it hit it. All right? It hit it like this. That's literally our pricing target, 10 to the 10.5. Look at it, literally hit it like that, guys. Bam. That's me for, days on days telling people exactly what that pricing target is. They set up limit orders. They set their limit orders up, and what? The market maker decides he's going to go pick them up for a ride. Picks them up for a ride, what do? Well, they clear the average, which is about 30% on this. It's a nice day. All right, it's a nice day. And let's see, that's a day and 4 hours. That's not bad. Let's make sure, I want to see how long that took. About a day and 4 hours. It's not a bad move of capital. It's not bad at all. 1 day, 4 hours. Now, it's important that we called it right around there. We were live, literally live on stream, and I called this and said that's about our threshold. That's about our max. Okay, 37.5%. That's about the threshold. That's the max. It's just the truth in that instance. So now the next issue, okay, I'm going to assume that this golden pocket's kind of blown through, and that absent, now this is where it should attract attention from the management team, absent some management team news by Harmony One. And we love the story, we love the technology. Guys, with Harmony One, you don't have to pay all these gas fees. All this stuff that's going with Ethereum, you transfer around into different coins. Harmony One is like Ethereum 2.0. It's phenomenal. It's phenomenal technology. Absolutely beautiful. We love it. We want more good news. We want business news. We want something to, excite the fundamentals and the base and get this thing rocketing up again. Because right now we're just playing on lower levels. That's fine. We have more money here. And I'll just tell you, this is hit. Now, this one's the next one. Now you start getting people a little, skittish in terms of, well, it's going to hit again. The market's going to make it hit. Okay, 7.8 at 7.82. Is that ideal? No. That's a 78% retracement. Now, what's the good news? We haven't been involved heavily on the 78% retracement. To the extent that we have been, what are we prepared to put in at the bottom? Double or triple down at every single level. Okay? I'll get into the management team and some different aspects as to what may have pulled people out of that traditional scope here in terms of some activities that went on up top. So this is a unique investment for us that we're trying to see it and make sure that it does go well for everybody. Yep, we're trying to make sure that for certain. But the ability to double down, and I've talked with people who don't have the ability to double down at lower levels, and this could represent anything. It could represent, same thing with Bitcoin, I have the same discussion. Same thing with Dogecoin, I have the same discussion. It's a different ticker, a different price. Everyone, you adjust your interest level. It's like, learn a story, learn something else, guys. It's important. Yeah? Look at this pricing action. What happened? Well, it went down, right? Consolidated. Okay. Kind of felt like going up, didn't want to. We hit 30%. Now the next level down is 7, and this could happen to who? This could happen to you, right? And I just bring that up because at the 0.07, 0.078, 0.76, 0.78. Yeah, that's right. It could certainly happen like that. 0.79, 0.78. Yeah, that's a pricing target. 0.078 is a pricing target. Hold on. Okay. Yeah, 0.078. 0.79. 0.078, 0.079. Okay? You're real close on the 7.8 or 7.9. 0.077 to 0.078, 0.079. Okay? Remember, I gave you the variable. There's a little bit of difference here at the bottom level. 0.077, 0.078, and 0.079. You're within. I'm keeping you within a 0.002. Okay. That's your next interval, your next target interval. So we have gone over that. We have gone over that's your next price target. That's a potential 30%. I'd say that. We'll look at the differential analysis on anything that needs to be, if it needs an additional variable due to the lower level, we'll get into that. We'd like to see some great news on that. We'd like to see some great action on Dogecoin. Dogecoin is leading the group right now. Everything's in the red. What's up? Dogecoin. Who's behind it? The richest guy on the planet? Okay, good. So we know what's going on. We're excited about that. I want you guys to catch up on some of the old tapes. I know it's kind of getting late. It's like 2:30. We were up very early, like 6 a.m. doing this. So my brain's not fully functional. Still mostly functional. I assume yours is too. But we'll try and respect your hours to make sure that you're functional as well as we are functional. And we'll try and keep having a good time. It's been a little bit intense with getting into 78% return, 78% return. 30% return, whatever, 15% return, et cetera, covering the 15% return on Bitcoin, covering the 30% return on Harmony One. So we've got like three pots on the stove right now, and there's just enough people in the kitchen that we gotta, it turns into kind of like a 24/7 operation. I would love to see, just for you guys to know, I would love to see these interval timings work with Fibonacci. They don't all the time, which is why. They'll give you a good reason as to why something's taking a longer time, and they typically do. They'll start to stretch out, and you'll see that on, for instance, on Harmony One, right? Everything going great, it's all the way up, and then, oh no, what happened? Yeah, it's that fall off. So the Fibonacci's are telling you that occurs, okay, through these previous kind of equidistant intervals here, 0, 1, 2, 3. It stretches out. You get an extra 50% on your time frame right here. And then potentially more. So we need to reset. And this line in here, that's at 230. That's hitting right now. It should start to kick up. It's difficult to work with Fibonacci's on timing. I like to do it because it gives you a reference that maybe the timing should kind of increase. We've seen a phenomenal jaunt here. Okay, we're prepared at a light level, already involved, strategists involved. Okay, hit that first level of involvement, that first level of investment. Beautiful. You guys review the tape. If you just showed up and you want to listen back to the previous parts of the tape, you're welcome to do that. And for those of you who just showed up tonight and you're kind of new members, if you'd like more individual content like this, just give us a thumbs up here towards the end. I would appreciate that. And the only other thing I would ask, in addition to that, is if you could just type in where you're from, so that we have that on the radar, and we will keep that information, and that'll let us know for diagnostic purposes and kind of shout outs. We'll see where all of you are from. We have a good group, a lot of professionals. If you get into the Discord, we have everything from finance and econ majors to doctorates or PhDs or MBAs. We have a lot of individuals who are market savvy and able to, literally some of them are able to approach you on, and they never do, but like to give you financial advice. Some of them do that for a living. But that's not what the Discord's about. You won't receive that. If anyone receives a comment down below in this video that says WhatsApp, and you call someone, that's like someone in Nigeria. We found out today, and shout out to Yoski. He found that out. Our director of social media, etc., social platforms. Yoski found out that's someone in Nigeria that's impersonating us, trying to get people to invest money via WhatsApp. That's not going to happen. If you go in the Discord and you need to ask me a question, there's an area in there where you can ask me a question. So you can, it says ask London a question. So you can ask me a question. And it's real easy. Look, we got someone here from Hungary. Shout out to Hungary. That's very nice. Very nice to have you here. Panama City Beach. What's going on, Panama? Australia, mate. What's up? And nice to have you here. We got. Here we go. Hi, everyone. I want to buy $5,000. There you go. Listen to the logic pouring through. Chicago in the house. Florida in the house. Missouri in the house. It's now a good time. You got to listen to the strategy a little bit. Rewind maybe 20, 30 minutes. What are you guys going to tell her? Join the Discord. Yoski, Red Raider, get her into the Discord. Get him into the Discord. Get us to talk, and let's learn the strategy so you guys understand. Pepper it in lightly at the top. It's at the top now. Pepper it in lightly. Make sure you're not overexposed. I don't want to talk to anybody in 2 or 3 weeks. Okay? Anyone in 2 or 3 weeks that say, I got up at this level and now I'm trapped. It's not worth trying to multiply your $5,000 to 10 grand and make 2 times your money from 40 cents up to 80 cents or $1. It's not worth that to feel like you got trapped in something. It's not that big of a gain to get up into $1. I'm almost of the opinion it's fun to trade it at a light level. We'll get in at a light level. We'll enjoy it. I don't want everyone to show up at the end. Hey, can I just throw all my money into it? No. You got to listen to the strategy, like market strategy. You got to behave. Understand, at a lower price, you have more demand. Okay? At a higher price, like it's pretty high right now. It's near the high. So you're not going to have much demand. And if you don't behave by like market principles and strategy, you're going to get washed out. So those of you who are saying, can I buy now? Yeah, you can. You can do anything. But, kind of obey market strategy and principles. Get lightly involved. Strategists got lightly involved in around this breach down to the first retracement level into the 0.2 34.36 after kind of this newer interim high at the 34 cents. You're so close to that, but just pepper it in, keep it light. Don't leverage the farm on it, as we would say. And let's see what we have. Looks like everything's going well. You guys are doing great. Twin Cities, Florida, Missouri. What's up, Missouri? And you guys have got appreciate. Yeah, you guys have got an appreciative kind of crowd here and good people. So I'm just going to let you guys go. I'm going to hop over into the Discord for a while. If you guys have specific questions, jump over there. And the other individuals also in the Discord will be able to help you out with generalized strategy. Guys, it's just market strategy. And when I say that, it's the common market strategy that everyone learns. It's not particular to me or you. It's supply and demand. And the fact that you should always have some backup resource capital. So I can say, well, this is my, as much as I'm using the program here to kind of compute the entry prices, I'm good at doing that. I'll tell you, just from a technical standpoint, I'm very highly functional in terms of technical and financials. I always have been. Ran an investment trust, lead investment analyst out of Duke University on $1 billion deal, working right across the table from Harvard Foundation. They're very strict on numbers. I'm very good with numbers. That's what I do. That's what I've done. So understand that that's just that's the nature of who I am, and I'm able to bring that to you. So we appreciate you subscribing and turning on notifications, being plugged into the community, so you can meet more people like me, and then we can have a good functional kind of a group here, because we have a good group that's hitting the targets and just knocking out of the ballpark. So it's a good thing. Again, any more likes would be appreciated. We got about 139. That'll just help us get this out to more people who are like-minded like you and want to learn about Dogecoin and how to. We're not gonna trap this thing in, but we're gonna make some cash on it, and our strategy will prove true. I'll say that it has to. It's based on mathematics. So we're protecting ourselves. We have foundational kind of insurance money, resource cash, stashed aside. We're not over leveraged on anything. And we will fare better because we're kind of risk averse. We're looking at the risk. We're looking at the different components of how we can structure a discipline, and it's gonna make sense. That's it for now. I will see you guys tomorrow. This is London. This is the Crypto Kingdom. It's been a pleasure talking with all of you. I'm very honored to have you here. And for our loyal subscribers and our new subscribers, just know we strive to bring you the most accurate information. And it may seem like a complicated strategy, guys. It's real easy. It's real easy. We want to make sure that you behave like a normal market participant, that at a real high price, you're not going to overpay, okay? You're not going to do that. There's no demand. As the price comes down, you become lightly involved. And then you really start to see a better price, well, you're going to double and triple down. Why double and triple? Well, you want to make sure you have insurance on any higher levels of investment, right? We don't want to see you parse in and out with stop losses and lose 10%